Welcome, everyone. This is the first Droptine Studios podcast of 2026, and we have a great one for you today. So just real quick to keep you updated, we have over 14 podcasts already scheduled with different guests. So if you would like to be on the podcast, go to droptinestudios.com/podcast, or we're actually going to be taking sponsors this year. So if you'd like to be a sponsor of the podcast, you can go to the same website and see some more information. But some statistics that I want everyone to see real quick is we had a 86% higher view retention than any other shows on Spotify last year, which blew my mind because we only did 5 podcasts, and honestly, we didn't even try. And then we also grew our audience on YouTube and Spotify over 365%, and we averaged over 500 plays or views per episode we posted, and the industry average for wildlife is 30 plays. So we are super excited, and there's actually one more. I said our show, or the stat we were given says our show was the top 15% of videos on Spotify. So we are super excited to see what we can do this year. If we were able to do that with 5 podcasts, not trying last year, our goal is to do a minimum of 25 this year, but hopefully we can do more. Now introducing Brian Gilroy. Brian, we're so honored to have you on. It's really nice for me that you live 10 minutes down the road because I can give you a call and bring you on, but I'm honored to have you as our first guest this year.
Well, thanks. Happy to be here. Really a privilege to participate.
Yeah, so we've been traveling like crazy right now with trade shows, and I kind of want to start off with that. I know y'all do some trade shows as well, so I guess what do you see as important? Why are trade shows important for people to either be a vendor or attend?
Man, that's a really great question. And this time of year is, I would say it's exciting, but it's also a bit overwhelming for anybody that's worked a trade show before. You really get a sense of how much work it is. It's very long, grueling days of intense focus. And, as a salesman, there's the acronym ABC, always be closing. So, to sit in a booth all day and one conversation after another conversation, to be completely focused on that, it's draining. And the fact that we have these back to back seemingly every year,
right?
It's, going into the season, it's like you mentally get yourself prepared, like you're getting ready to go run a marathon, but there's also the fun component of it. You get to see all your friends and you get to, look at really cool hunts and maybe book something. And so it's an exciting time of year for us. And I've been doing this for a long time. And so I don't know that I've gotten used to it, but it's something that I kind of walk into the beginning of the year prepared for. So I first started attending Safari Club International. It's probably been somewhere around 15 years ago as a vendor. When I was in the oil and gas space, we were an exhibitor at Safari Club. It's a kind of a target-rich environment.
Right.
If you're dealing with a high-end investment, which is what I did at the time. And so I found that from a marketing standpoint, dollar for dollar, it was the best money I could spend. There was nothing that I could do that produced a better result. It's relatively easy for us to do several $1 million of business at the show, and then there's more business that comes afterwards.
Right.
So I think that the significance of it is really understanding the marketplace and really understanding the differences between each of these individual, expos or conventions or whatever you want to call them, because they're not all the same.
Right.
There's a lot of difference between them. Not just from the volume of traffic, but also the demographic of the people that you're meeting there. But I look at this really simply. It's marketing,
right?
And you're in the marketing business, so if you're going to market, number one, you want to make sure that you understand the arena that you're stepping into, because it allows you to establish some expectations. But the other thing is that when in Rome, do as the Romans do, so if you're going to show up at one of these things and all you're going to have is a table and a tablecloth and some business cards, the likelihood of you performing well is very low. it's expensive to do this. Katie and Kelsey, you've worked with them quite a bit. We've been going round and round for the last 2 weeks about a damn sign.
Right.
We had a sign in our booth, and we have a pretty elaborate booth, but we have a sign and I hate it. It's not as attractive. It doesn't have the boom. And so we've been going round and round trying to make sure we get the right sign, and they're expensive. It's, I don't know, $1,500 or $2,000 for each of these signs that we put up. And so I guess the moral of the story is these are by far, in my opinion, if you're working in this space, they're the best place to get your name out there. They're the best place to generate immediate revenue. But if you're going to do it right.
Right.
Don't half-ass it. It's not worth the money.
Yeah, I would say in marketing in general, it's kind of like a little catch-22, because we'll have people want to do something and they will obviously want to, quote unquote, dip their toes in the water before they fully invest. And we'll have people ask, well, what's the number one problem you run into? And I said, people just don't spend enough money. And so whether that's on Google or at a trade show or whatever else, but it's like, it's all a bidding system. It's like, how can I get you into my booth? I need to have and y'all have a beautiful booth, but also even any marketing, it's just to a point, you just have to pay to play.
To give some perspective, there's a waiting list to get into SCI. You can't just walk in the door, and then they have a ranking system on how it is that you get to select your booth. But talking about a pay to play, I stepped into that arena and bypassed the line by becoming a corporate sponsor. It's expensive. I mean, I don't know what off the top of my head we spend, but it's $100,000 or more every year. I don't know what the exact number is, but it's that plus a donation. And then you have to do all these other things that go along with it, getting your people there, getting the hotel, getting the booth, making the booth, it's just all your literature. It is an expensive endeavor. And if I had to guess, we're probably between all of these shows that we do, just kind of off the top of my head, it's easily $300,000 to $400,000 of just raw expense to go do these things. But I can tell you, it's the best money we spend from a marketing standpoint.
Right.
It produces dollar for dollar the best return. But you have to do it right. It does matter.
We try to internally, we try to set objectives per show, right? So like when we go to EWA, we're not signing contracts per se. We have, but it's more so let's be around, have people sit in our couch, entertain, but you have 3 full days at a small show like that versus like we didn't have a booth, but we went to the outdoor extravaganza that after SCI bought Texas Trophy Hunters, and it is more like a Dallas Safari Club or Safari Club International. As people are in and out, you got them for maybe 2 to 3 minutes if they stop in your booth, but it's turn and burn. And how can you do that? But we try to set objectives. Like we're doing CattleCon this year, and our objective is to hit more corporate clients, but try to get enough day jobs to just pay for the expenses. And so that way my team can feel like they're successful, or at least how do we define success per show? But at EWA, it's just being there. There's been so many media people come in and out of this industry. It's like, all we have to do is show up and we'll probably get the job. Yeah. And so that's what we define success at, being there. But yeah, it's expensive, but it's even more expensive if you don't spend more money, which is hard to sell people on. Our objectives for each of these shows is very different. And you kind of touch on that. And it really is dictated by the demographic. As I said, they're not all the same. What I have found is, like at Dallas Safari Club, and we're not attending Dallas this year in Atlanta. I'm really looking forward to them making some changes, and I don't know all the ins and outs of why they ended up in Atlanta or whatever, but I know for us, we spent $150,000 we got no traffic. So I'm really hoping that improves this year for them. We just couldn't take the gamble, and hopefully they end up back in Dallas at some point. But when the show was in Dallas, what we found about that show, and the reason it was worth us being there, is that there's so many Texas landowners that are attending that show
that it gave us the ability to do two things. One of them is we were able to buy animals. We're in the buying business. We buy animals all year long. And so we were able to meet people that we didn't know or people that we already knew and negotiate transactions to buy animals, which most people are going to the show to sell something. But for us, being able to buy inventory is very valuable. And so it's really good for us to do that. The investment side of our business, where we're selling an investment vehicle, we do almost no business at Dallas. We found that while there are some people that travel to Dallas from around the country that are, capable of making the investment that we sell, there's so many people that you have to weed through that are there buying a pocket knife or a flashlight that it's very, very difficult to isolate out the person that fits the model for our investment. But what we find is most of the Texas landowners, they gravitate to our booth and they come and see us. We don't actually have to yank them out of the aisle and then spark up a conversation and find some way to, get their attention. They just show up. And so it's a lot more work to weed through, the haves and the have-nots at Dallas than it is at the other show. Whereas at SCI, I've always said that at Dallas, if 10 people walk by my booth, one of them is the right person.
Right.
At SCI, if 10 people walk by, 9 of them are the right person. And that's unique to my product. I don't sell a hunt or any of these other things, a fur or jewelry or whatever that is being sold at all these shows, but our product is very niche. And so for us, the demographic at SCI, it makes it to where if I grab somebody out of the aisle, I know most likely I'm going to end up having a half-hour conversation with them. And it's, if it cost us 3 times more to be there, we would spend it.
Right.
It's worth it. But like you said, what we've done with our booth is, we have a 20 by 30 at SCI and it's turned into a bar. I don't, for a guy that doesn't drink, it's like, I find it a little funny, but we have found that by creating an accommodating environment that's inviting, that gives people the ability to come and sit down and have a good time, it brings a vibe into our booth that it's exciting,
right.
and it's not just a sales pitch.
Right.
So I just, for anybody that's getting into this, that you're going to go market at these places, it's highly competitive if you're selling hunts. There's lots of people doing it. There's lots of Texas ranches that are selling hunts. So if you're going to do something and be successful at it, look at the people that are successful. If you look at Champion Ranch or Ox, their booths are out of this world.
Right.
They go above and beyond to make sure that they've got the most attractive, most exciting, cool stuff, and it works. And that's the case with any product that you're marketing in this environment. It's just really important that if you're going to do it, spend the money, stand out. Don't do it half-assed.
Yeah, and to continue to do it. Most people will go to a show and be like, well, I didn't sell anything there. I don't want to do it again. Well, all your initial investment is done. You bought the booth. You got the print materials. So I tell people when we sell booth stuff is like, you think it's expensive because you only use it once. But if you did 10 shows a year, it's 10 times cheaper.
Yeah.
And so, but yeah, that's what we try to just talk to people about. But one of the things that it's not a trade show, but y'all had the tax seminar and y'all are even doing those online now. So even from an educational point of like networking and meeting people, how has those been? Y'all have done quite a few of those now with where you can invite your CPAs to listen to a seminar that y'all are hosting.
There's a lot to be said for longevity and staying power and consistency. And I can tell you, I would not be able to do any of these tax seminars if we were just stepping into this. Credibility goes a long ways when you start giving people advice and direction and guidance. And so at these shows, I don't even know how many people it's been. It's a lot where they walk up to our booth and they say, I've been watching you guys for 5 years or 7 years, or I've seen your marketing in the magazine or the newsletters and I've been watching. And at first I thought you guys were terrible, that you were a scam, that it was a pyramid or a Ponzi or whatever in the world word they want to use that day. But I've been watching And I've seen your growth, and it's been remarkable to see. And, you know, if we had the expectation that at our first show we were going to knock the cover off the ball, we would miss all of that. And I would tell you that now that's the majority of the business we do at these shows. It's not people that have never heard of us. It's not people that are just showing up for the first time. It's people that have been watching for a long time. They've watched our path. They've seen what we've done, and then they show up and they've already got a list of questions to ask. And so it's like the marketing has pre-sold them. The marketing with no human contact whatsoever has pre-sold them over a period of years. And, you know, on that note, our ads that we put in Safari Club magazine or even on social media, we can immediately see whether these work. You know, you get immediate feedback on social media as to whether an ad is working. When we put ads in like Safari Club magazine, people go to our website and they fill out a form and make a request. And so when these ads come out, we that day or the day after or the week after, we're getting all these requests for more information. So you can see whether something is working and whether it's not working. And so that's what you guys specialize in, is making sure that they work. And so this is a snowball effect. It's not something that just happens because you show up at a show once, or you say, oh, I'm going to go and spend $10,000 and I'm going to get a booth or whatever, right. Or I'm going to go and pay to get this spot, this is the long game. You know, I'm 51, I think. I'm 51. Yeah. I'll be 52 this year. And, you know, for most of my career, I was the young bull up on the hill looking down at, you know, all the cows thinking, let's run down there. And now I'm much more of a long play kind of guy. I look at things in terms of a decade. And marketing, just from my perspective, while you do get some immediate response and immediate reaction, if you don't look at this as the long game, you're probably going to be in it for a short game. So going back to the tax component of this, it has been my experience for the last 25 years that even the most sophisticated business people, really, really, really smart business people, very successful business people, that they don't know anything about tax. They have no idea how it works. They have no idea how to navigate the path where tax is concerned. They have a CPA that they give all their documents to, and their CPA doesn't really do anything for them. Periodically, they have salesmen call them that tell them about this great investment, whether it's oil and gas or whether it's wildlife or whatever, that's going to give them this incredible tax incentive. They tell their CPA about it, and their CPA says, yeah, you probably don't want to do that. But what the CPA doesn't tell them not to do is to keep sending millions of dollars to the IRS. The CPA says, hey, quarterly payments are due, pay up. Your next payment is due, pay up. Your next payment is due, pay up. Oh, by the way, we didn't make good enough quarterly estimates, pay up. And you're left standing there going, well, what do I do? I guess I just have to pay it. And, you know, in the wildlife business, when I first got into this, and this is really where I saw a lot of opportunities. There was a lot of flaws in the industry when I stepped into this, and I think we've corrected a lot of them, although I see some of them resurfacing. The thing that I saw that was the most consistent was you had these people that had been doing this for decades. None of them were taking any of the tax deductions that were available to them, like none of them. And this was not treated as an investment. It was not treated as a viable tool for minimizing tax liability. And it opened the door for me to present opportunities that were built around that. And so for the now 10 years, we've offered basically guidance to people on how to do this for free. And we just got the benefit of selling them animals. On the investment side of our business, which is about 50% of our business, these people don't own land. They don't live in Texas as a general rule. They are only buying this because of the financial model that's built around the tax incentives. And so we spend a lot of time marketing to CPAs, teaching them about this opportunity. And then once the CPA gets on board, they tell their client to do it. And it's a very easy sale. But I realized, as the big, beautiful bill was on the table and as depreciation was changing, we had done these educational events, the Day of Education, for a while. And those were really well received and widely attended. But I thought, yeah, I really need to do something that's more tax focused. And this is where the Wild About Taxes event was born. And what that's evolved into is now I'm actually doing one-on-one tax consulting for a fee. And I also will integrate with the CPA that someone is working with on the basis of its money-back guarantee.
Wow.
If your CPA disagrees with the things that I'm presenting, you pay nothing. There is no charge. And as of today, I'm batting 1,000. I have yet to run across a CPA that tells me that I'm wrong, or I don't know what I'm talking about, or that this doesn't work. And what that ultimately results in, and I'll give you an example. I dealt with a guy that extraordinarily successful. When I say extraordinarily successful, I mean extraordinarily successful at the very, very upper end of success in publicly traded companies, and had a piece of property, made enormous improvements to the property, millions of dollars of improvements, and was getting no tax benefit whatsoever. I met with him and went over a lot of these provisions, and you could tell his brain was kind of rattled, around this just seems too good to be true. And he asked me, well, what's the next step? I said, well, I want you to schedule a call with your lawyer and your CPA, and I want to get on the phone with them. And so that happened. And we went through the whole thing, and he was on the call, and they're agreeing with every single provision that I'm describing. And where it leaves people is, well, why didn't you tell me about this before, when they're talking about their tax counsel or their lawyer? Why have you not brought this to the table? And I can give you the answer. The answer is that most people are not tax strategists. They're tax filers. They just file. They put it into an AI software, and the AI software spits out the result. There's very few tax strategists in the world. And that is what I am. It's what I've been my whole career. And I spend a lot of time studying legislation and how it affects my life and how it affects my business. But I also look for opportunity, in areas where ignorance exists or lack of information exists. There's oftentimes a big pile of gold that can be uncovered by the person that discovers this absence of information. And that's really, I think, what I've done both in the wildlife space, and I'm now kind of evolving into more real estate, land conservation, and some other areas where there's opportunity. So these events that we're doing, they're really geared towards, as I said, I'm a big picture person. Right. I'm a 10-year kind of guy. I'm of the belief that if I invest a huge amount of time educating people about tax through these events, and on these events, we don't make any money at all. We cover our overhead. But what it results in is more people coming into the industry. It results in more people buying animals. It results in more participation, more knowledge, more confidence, more CPAs and lawyers recommending this. And all that does is strengthen the industry for everybody.
Right.
It builds on my business, but it strengthens the industry for everyone.
And I think the two things that I want to correlate that to is these people aren't scared to spend money. It's more so if they can justify it. And the way that we've seen it and the way that you're talking about is we've been pulling stats. So like we've realized we have an 89% retention rate with clients. So it makes it a whole lot easier to be like, what can I do to spend money either at a trade show, online marketing, or whatever to get a client to sign on? Because once they sign on, there's an 89% chance we keep them year after year. So that makes it easier to spend money. Just like what you're talking about, if you see this as a long haul, or if you pulled statistics from your business, even saying 50% is animal sales or other things and 50% is the other side, it makes it easier to understand. I think a lot of people don't even, in the ranching world specifically, don't deep dive into their ranch. They don't deep dive into their investments. They just have enough money, they can spend it. But you're 100% right. If we could bring more education, more justified reasons to spend money and why you should do it rather than, well, 25% of what I buy dies. That's a terrible statistic to base a business off of. And so if they had more reasons, more education, and you're right, more people are going to go to these online seminars, in-person seminars. They're going to get to meet you. They're going to realize who you are as a person rather than what people are saying. And they're going to go,
what are they saying, Austin?
I don't know if I can say that on a podcast, Brian.
I might have heard one or two things.
But that's the point is, the more I think people would get to know you is, and I think it's stupid, but most of the reason people don't like you is because you're bringing more education. A lot. I grew up and I thought it was a sin. I'm pretty sure I've said this on the podcast before, but my grandfather told me it was a sin to tell people where you bought animals from. And I think Facebook and social media has done a good and bad service to the industry based on perspective, just because I remember being like 10 years old and my grandfather would cover my eyes so I wouldn't see the ranch gate. And I'm like, I'm 10 years old. What am I going to do? Tell everyone? But that was what I grew up in, is he told me, like, you do not tell people who we bought. You do not tell people where we got this. But now you make a Facebook post and there's 56 people tagged that you could do that. But all that to say is, the more people that meet you in person, more people that understand your business, but more people who understand that you're just educating people. Yeah, for the long play, but just up front, if people knew more about it, they would put more money in this industry. And if there's a cash flow going through this industry, it's good for everyone.
You know, I as a person, I'm a data-driven person. I'm a fact-based person, which probably makes me poor at relationships. But I live in a world of fact and data and information. And for whatever reason, God gave me an ability to kind of tie it all together in a way that becomes worthwhile and meaningful. And when people really get a grasp on the opportunity that exists in the wildlife space, and I'll qualify it with an if they have another business that's generating a lot of income and is causing them to have tax problems, and they can use tax deductions. So with that caveat in place, when someone really understands this, they don't have the ability to say no. They can't. It would be irrational, illogical, and borderline stupid to not do it, because what appears to be too good to be true, it is in fact true. And I can elaborate a little bit on that. If I own a piece of real estate, ranch real estate, okay, and that ranch real estate is it's a hobby, right? It's a vacation property. It's where I go hunting and I goof off with my friends and I have a good time and all that. Sure, you can get an ag exemption, right? You can get a wildlife exemption, or you can get an ag exemption, which means that you don't pay property tax, or your property tax is really minimal. That's a great benefit, right? It's funny, I just got back from Pebble Beach. I was looking at this house on the water, and this is it's a $30 million house, and they pay $300,000 or $350,000 a year in property tax to own it. So from an investment perspective, it has to go up by that amount every year just to make a break even on it, right? But when you're talking about a ranch where you have an ag exemption, not having the tax liability on a $5 million ranch that would otherwise be getting taxed at 2.5% property tax, that's a great advantage out of the gates. You don't have to have an operating business to do that. You don't have to do anything to do it other than maintain the ag requirements by the county, right? So on the surface, that's the beginning of this. But everything else I do on my ranch, if I don't have a business, it's non-deductible. So that means that everything I'm doing, I'm paying for with after-tax money. So right now, 37.5% is the top tax rate. So that means that for every dollar I earn, I get 62.5 cents, right? So that's the money I'm using to have to pay all the expenses on my ranch. Feed, buggies, improvements, roads, water, all the stuff that goes along with that. It's after-tax money. But if I decide that I want to go and be in the exotic wildlife breeding business, and I put males and females, that is the requirement, on my property, now all of those things that I do, I get to expense them. So instead of 62.5%, or 62.5 cents that I'm paying it with, I get to round that back up to 100 to $1. I don't have to pay tax on that. I get to pay for those expenses with pre-tax money. So it's 100% tax deductible. So what does that mean? It means that the government is giving me a 37.5% benefit for running my own ranch. Then when you add in things like depreciation for roads or barn dominiums or fences or ponds or irrigation, which, can water all sorts of stuff, you get the same benefit. So what that means is I buy a ranch, I'm not paying any property tax on it, but all of the improvements that I'm making to that property, I'm getting to make those improvements with pre-tax money, right? Everybody's got a retirement account and they dump money into the retirement account because they think that there's this benefit. I'm getting to put pre-tax money in. Well, you get to do it in an unlimited manner on your ranch. You're making a deposit into a retirement account on your ranch, into real estate that goes up in value, and you're getting to do it with pre-tax money. And when you start to understand this, you would be a buffoon not to do it if you own a ranch and you have tax liability from another business. It would be idiotic. It makes no sense to not do this. And so what I'm trying to do is I'm trying to educate not just landowners, but I recently in the last year or so, I got qualified to do continuing education for CPAs. So if a CPA sits down with me for an hour and goes through my presentation, they get an hour of credit for continuing education. The event that we did in Marble Falls was like an 8-hour event. They got 8 hours of continuing education for doing that. And nice. So we're trying to align CPAs and lawyers with their clients to get everybody on the same page so that they can maximize these benefits. But going back to the investment return, when you do all these things and you're getting to improve your real estate with pre-tax money and you're getting to expense all the overhead and you have no property tax because you're ag exempt, go and compare that to an apartment building. Go compare that to a piece of commercial real estate in the city. You don't get any of those benefits on these other pieces of real estate. You don't get to do all those things at all. So when you compare these things side by side, it's blatantly obvious that one is better than the other. And when you add in the income element of it, in other words, if I have rental real estate, it's passive income. And if I'm in the top tax rate, I pay 37.5%. But if I'm in the wildlife business and I'm selling offspring, as long as I hold them for a year, it's long-term capital gains. So it's 15%. So it's like, I have the choice of paying 37.5% in tax or 15%.
So is that do you think most people would choose commercial real estate like an apartment building just because that's what they're used to? Is that what you think? Because if there's this many, and I guess it would come down to a lack of education because they're like, well, I don't know, my animals are going to die. That's what they've been told. That's what they think. So they're like, well, apartment buildings, I have this much per rent times 200 houses or 200 rooms. Is that what you think it is? Is people just assume, and that's what they've been told generationally, this is what makes money, just buy apartment buildings, and they just don't realize that they can make money off of animals?
So in addition to the conferences in the wildlife world, we also go to a lot of conferences in the financial services community. So I don't know, last year I probably did 8 or 10 of those. And these conferences are where people that sell alternative investments are presenting their product to the financial services community for them to go out and sell their product. 90% of the products there are commercial real estate. 90% of them. I'm the only guy in the wildlife business there, which I love. It's great. I enjoy that. We're the prettiest girl in the room, to say the least. We stand out the most. But there's a need for commercial real estate. We need buildings to people to have offices in. We need shopping centers. We need all these things. And so where there's a need, somebody's going to fill it. The model on that is very cyclical. Because of interest rates right now, it's very difficult to go and buy a commercial property and pencil it out and make it work. Very, very difficult. So it's a very, very cyclical business. People that have lots of money are looking for places to put their money. And commercial real estate is one of those things that they're familiar with, but it's also easy to get to. It's accessible. There's lots of people bringing it to the market. There's lots of people educating about it. There's seminars. There's an unlimited amount of promotion going into commercial real estate and even residential real estate, whether it's a VRBO or whatever. It's like everybody knows storage units are good investments. Right. Well, go try to buy one that's a good investment. Like, good luck. It's kind of saturated. And so it's the people that are really good at it are the ones that are dominating it. But going back to the wildlife side of it, how many people are out there beating the drum saying, hey, buying ranches is a great investment. Like, buying ranches is way better than commercial real estate or way better than, VRBOs. And the answer is almost none. And it's because ranches don't cash flow. Like, they don't cash flow.
Do you have a bunch of ranch real estate brokers that have approached you? Just because I figured if they're going to be selling property to put animals on, they have the tax benefits. Because I feel when you ask that question of like how many people are beating that drum, the first thought was ranch brokers because they make a cut whether you make money or not.
Yeah. Ranch brokers are much like the rest of the world. They don't really understand tax. Very few of them really get the game of tax. And so they don't see the opportunity that's sitting in front of them. And I'll give you an example, something that I've gotten into, and I'm really advancing the ball on it here this year. So I've got a deal right now. Okay. I actually just put it under contract. It's a 285 acre piece of property. The seller was asking like 1.6. I put it under contract at 1.375, and I got them to agree to do an owner finance deal with a small amount down and a 5.9% interest rate. But on the property, there are water wells. Okay. And those water wells cost somewhere around $60,000 to $80,000 each. So when I buy that property, because of the big, beautiful bill, I can take 100% of the value of those water wells and deduct it the year that I buy the ranch, right? So let's call it $250,000 of value. Then there's a fence there. I can deduct the value of the fence. Why? Because I have a breeding business. I'm going to be breeding exotic wildlife. So here's this property that I put under contract. I made a good deal negotiating on it, and I pre-package about a $300,000 tax deduction walking in the door. So I can take this deal and flip it and then sell it to somebody else on the premise that they're buying a deal that the down payment is less than the tax benefit that they're going to get in the year that they're buying it. So 50 grand is the down payment on this deal, right? But the tax deduction on 300 grand, okay, is going to save somewhere around, call it $110,000 or $120,000 in tax. So you're actually getting paid $50,000 or $60,000 to put the ranch under contract just by buying it. Mm. And now if you can take the property and you can get it to cash flow, and cash flow is the key to this. Like, the reason you don't have people beating their drum about buy a ranch, it's a great investment, is because they don't cash flow. But the beautiful thing about the exotic wildlife business is that this cash flows the ranch. You can not only cover all your overhead, but you can generate a profit, and the profit is a long-term capital gain. So it doesn't happen overnight. You're looking at a 2 to 3 year time frame minimum, before you start seeing a return, unless you're buying bred animals, right? If you're buying bred animals, you can shorten the window a little bit. But the fact is that because of exotic wildlife, we have the ability to cash flow land. Cows don't do that as a general rule, unless you have really, really good grass. I don't want to be a corn farmer. I don't want to grow soybeans. I don't want to do any of that. And you can't really do that in the hill country. It's kind of rocky. So how do you take land in the hill country and cash flow it? And the answer is kudu and sable and bongo and Cape Buffalo. And suddenly you have this piece of real estate that gave you all of this cost seg up front. It's ag exempt, so you pay no property tax. You're improving it with pre-tax money, but oh, by the way, it cash flows. Like it generates income. And so I don't think ranch owners, I don't think ranch brokers spend a lot of time really thinking about how do I package this in the way that is going to result in me getting a sale sooner than later and getting maximum value. They still think that pictures are the best marketing. And what I'm saying is paying 10 grand and getting a business plan developed on a ranch is a really great marketing tool. Really, when you're talking about an $8 or $10 million ranch,
right,
if you show a potential buyer a cash flow model around breeding exotic wildlife coupled with a cost segregation study that gives them $1 million of tax deductions the year that they buy it, just from buying it, not even putting the animals on it. Suddenly you have a landowner that's realizing it doesn't cost me anything to buy this deal up front if I'm financing it. My whole down payment is covered from the deductions. And so I think that that's a far better sales model for a piece of real estate than just great quality photographs, because how do you stick out?
Right.
There's so many ranch brokers and there's so many places where marketing is happening. And so we've spent a little bit of time talking to brokers about this. They just don't grab onto it. They just, and it's because it's foreign, they don't understand the tax side of it. They don't understand the wildlife side of it. And it's so much easier just to go with the standard protocol of what is.
Right.
And, my life is kind of marked by not doing that.
So would you say kind of similar how, and forgive me for my ignorance up front, is because I'm not in a position where I'm having to worry too much about it yet, but is this same tax implications, whether it's on a $10 million property or less, is it kind of like what we talked about with trade shows earlier? Is it the more you put up front, the better benefit, or can it help the small guys too?
Look, let me just talk about cost segregation and what cost segregation is. Okay. Under the Big Beautiful Bill, they have accelerated depreciation on any asset that is a 20-year schedule or less, meaning that if I go out and I buy a tractor, okay, the IRS says that the time frame on that tractor, I think, is 5 years, something like that. Their perspective is in 5 years, my tractor is going to be worthless. That's the way the IRS looks at it. So historically, I would get to write off 20% of the value of the tractor every year. But 25 years ago, the government started advancing this forward and allowing us to take greater deductions in the first year. And when I got into the wildlife business, it was 50% in the first year, and then the rest you got over 5 years. In 2017, the Tax Cut and Jobs Act accelerated this to 100% in the first year with no limit. So you could buy as much business equipment as you wanted, and you could write all of it off in the first year, unlimited. From 2023, 4, and 25, depreciation was going down by 20% every year. It went from 80% to 60%, and it was going to be 40% in 2025. This was very, very much affecting our industry. It was severely harming our industry because when you can't get the tax deductions in the first year, and you're having to carry them out over a period of 5 years, it's very detrimental to the economics. It's very detrimental. But the Big Beautiful Bill reinstated this back to 100% in the first year with no limits. So what does that mean? It means that when I have a business, I have a for-profit business, and I make an investment into that business by buying business equipment, they're going to let me write off the full cost of that in the year I buy it. And it doesn't matter whether I finance it or whether I pay cash for it. Makes no difference. So let's use a tractor as an example. If I buy a tractor, my tractor is $100,000. Bobcat says, I'm going to give you 0% financing for 5 years. I'm like, well, that's great. I'll take 0% financing, right? So it costs me $0 to buy that tractor. I get to write off $100,000 in the year that I bought the tractor. Cost me no money, but I get to write off $100,000. Now, as I'm making payments on it, I don't get to write the payments off, but I got to write off the tractor in the first year. So how does that translate into buying a ranch, right? So let's say I go out and I buy a ranch, and the ranch is $5 million. And on the ranch, there's roads, and there's ponds, and there's high fence, and there's a barn, and there's some office space that I'm going to use for my business, looks like a barn dominium kind of. And there's all this infrastructure. There's water wells, Carrizo water wells. There's all this infrastructure that's on the ranch, right? But when I buy the ranch for $5 million, the seller doesn't break out and say, well, the truck we're leaving is worth 20 grand and the tractor we're leaving is worth 15 grand. And they don't give you an itemized breakdown of what the cost is in the $5 million. It's just $5 million, right? But we get the benefit of saying, I'm going to break all this out. So on a $5 million piece of property, I take my Carrizo water well, I take the road improvements, I take the pond, I take the fence, I take all the feeders, all the blinds, all the trucks, the feed buggy, all the things that are there on that ranch. I bought those, right? I bought them that year.
Right.
And because I bought that business equipment that year, I get to write all of that off in the year that I buy it. That on a $5 million ranch can easily be $1 million or $2 million. Easily. Like you can easily get to that value. So just from buying the ranch, I get $1 million or $2 million tax deduction depending upon the infrastructure that's there. So what does that translate into? On $1 million, that's $375,000 that I save in tax the year that I buy it. Right?
Right.
So that's a huge benefit. So you can take this down to a smaller level. Let's just say that I go buy a piece of property and it's 25 acres and it's $500,000. And on the 25 acres, there is electricity. Somebody ran electricity there. So you have power, you have a septic system, you have water wells, there is some fencing on the property, and there's some deer blinds and there's some deer feeders. And oh, by the way, they're leaving a buggy and a tractor behind. Total value of all that stuff, I bought it for $500,000. The total value of all those things is $100 grand. I get to write off $100,000 in the year that I buy it. Right? So who's telling them this? Like who's telling that person that they get this benefit? The answer is nobody. Their lawyer's not telling them that. The CPA's not telling them that. The ranch broker's not telling them that. No one is telling them that. So they're buying these ranches. They're sitting on this gigantic tax incentive that they know nothing about. And what I'm trying to do is to say, not only will I teach you about this, but I will stand on the firing line in front of anybody you put me in front of, and I'll put my money on it that they will agree with me. And so it's like, why pass up on these opportunities if they're given to us? Right. This is not a loophole. It's not some secret technique. It's not a gray. This is black and white tax law that the IRS does not look at and say, this is suspect. Like they understand cost segregation. The law was created to encourage businesses to go out and invest and encourage people to go invest in things. And so they don't want to beat anybody up because they're making an investment, because that's what they're asking you to do. Investment into the economy is good for everybody.
Right.
So
is there any cost segregations that either breeders or ranch owners who've already made that main purchase can take advantage of, or is that animal purchases?
Yeah. So this is the great thing about cost segregation. There's a term, the term is in service. So let's say that I bought a ranch 5 years ago and my CPA never told me about any of this. And I've not been going through the process of really trying to run my ranch as a business. But in 2026, I am going to start my business and I'm going to be in business in the ranching business. I am able to go and book all the expenses that I've taken in as it relates to cost segregation of infrastructure since I started. Because what I'm doing is I'm placing the item in service. So it's not dictated by when I paid for it. It's dictated by when I put it in service. And so for a person that's been doing this for several years, but has not taken advantage of any of these benefits, if they announce to themselves and to the IRS, I'm putting this in service this year, they can take those deductions this year.
Interesting.
Yeah.
And that goes to all the same infrastructures, the tractors, the wells, everything else.
Yep.
Man, so is that able to be applied to animals? If you so you said when you have females and males, right? And then, so if someone was just a hunting ranch and they only bought males, if they kick females out, is that male now in service?
Yeah, I would say that they could convert that male from being an inventory item to a fixed asset. They would have to make an adjustment to the classification of the asset because it was in fact an inventory item. But the deal is, most people are not booking any of this stuff. Most people are not keeping good books. They're not going through the process of bookkeeping because their CPA told them it's a hobby. And because it's a hobby, they're not doing any of the legwork to run it like a business. So this can all be fixed. And so one of the things that we offer, the easiest way to keep the IRS off your back as it relates to a hobby designation is to don't run your business like a hobby. Run it like a business, right? So if you have a business, you were talking before the podcast started about kind of strategic planning and how you're looking at last year versus this year. You should do the same thing with your ranching operation. You should have a strategic plan, a business plan. And I know somebody actually that creates those. We create them for landowners for a fee at anywhere from $7,500 to $10,000. It depends on the ranch. We will create a business plan for you. It's about 100-page book, covers your whole ranch, all of the infrastructure, all of the assets. It builds in financial planning as it relates to what your expectations are from your breeding operation. And you take that and you put it in the cabinet. You give it to your CPA. And if the IRS says this is a hobby, you say, no, here's my business plan. And because you have that business plan, because you have it, that is one of the things that you can use to prove that you're not a hobby and that you're a for-profit business. And as the result of that, all of the things you're taking from cost segregation, they don't get questioned. But if you don't have a business, if you're running it like a hobby and you go and try to do these things, the IRS is going to tell you you're a hobby.
Right.
You're not running this like a business. And so what we do is we really provide a lot of consulting to people around how to do that. Don't write checks out of your personal bank account. Don't pay cash for things. Don't have your wife Venmo somebody for an animal. Don't do any of that. It all comes out of the same bank account. And it's whatever the enterprise is that you're running your business out of, that's the account. And so going back to your question of if someone bought animals in the past, can they get these benefits now? So remember what an animal is. It's livestock. And what livestock is business equipment. In the IRS's eyes, they do not distinguish a difference between a kudu and a Kubota tractor. They're both business equipment. It's the exact same thing from a tax perspective. So if you put your kudu in service this year, it's the same as putting your tractor in service this year. So you could have bought these animals years ago and they've been on your ranch, but you've never placed them in service. When you buy a ranch, okay, this is one that most people don't ever think about, okay? Let me back up. So when I first got started in Wildlife Partners, I realized there was this opportunity, and I used land.com as my primary marketing tool. And I would go look up ranches for sale that had exotic livestock on them. Austin, if you own a ranch, right, and you're going to sell it, and you have 100 head of cattle, when you sell your ranch, what is going to happen to your cattle?
You either sell them or sell them with the property, or
are you going to give them to the landowner or to the new buyer?
I would sell them to them. I wouldn't give them to them.
You're not going to give them away, right? I wouldn't give them away either. But for decades, that's what landowners did with exotic wildlife.
Right.
They gave the person buying the ranch the exotic wildlife, which is just preposterous. It's like, this is lunacy. Why would you do that? So I ran ads in land.com and Land Magazine, and the title was Free Livestock. And it was, you wouldn't give away your domestic livestock. Why would you give away your exotics? And I got tons of calls on that. And so when you're buying a ranch, Okay. Now landowners realize that when they sell a ranch, they're not giving away their exotic livestock for free.
Right.
They incorporate that into the price of the deal, right? There's no more deals out there where you're going to go buy a ranch with kudu and sable and wildebeest on it, and the landowner's unaware of the value of those animals.
Right.
That doesn't exist anymore. But what most people are doing when they're buying that ranch is they're not deducting all of the value of those animals when they buy the ranch. They're not doing that. So let's say I go buy a ranch and the landowner cleaned out all the supers, but he left all of the axis and all the black buck and all the scimitar and all of the aoudad and some fallow deer, et cetera, right? Well, I am allowed to get an accounting of all of those animals, and I'm allowed to take a 100% tax deduction on the value of those animals the year I buy the ranch. So who's telling you this? Like, is the ranch broker telling you? No. Is your CPA telling you? No. Is your lawyer telling you? No. Is the landowner selling it to you telling you? No. They're not doing any of that. But I'm telling you.
Right.
And I would challenge anybody watching this or anybody listening, if you think I'm wrong, I would ask you to go find the most sophisticated, intelligent, competent, capable CPA, lawyer, or financial advisor and put me in front of them. And I'll bet you $1 to a donut that they agree with me. And I can cite the tax law and I can demonstrate that this is not a gray area. It is not a loophole. It is not a secret. It is not some magic sauce that Brian Gilroy came up with. This is very basic tax law that is undeniable, indisputable, and it does not raise a red flag for the people that are doing it in any way, shape, or form. And the other part of this is if your CPA is telling you that you don't qualify for what's referred to as active treatment and instead it's passive, which that's another one of their favorite games to play, that is dead ass wrong if you do things correctly. And we can provide consulting on how to make sure you do it correctly so that you get active treatment versus passive. So
here's a little plug for you. How do they get in contact with you if they want to have that service?
Yeah. So first of all, we have our Wild About Taxes event. The other thing is I have a new entity that I've created. The website will be up and active here probably within a week or so. It's CCC LLC. Conservation Capital Consulting is the name of that consulting company. Right now, you can reach me through my email, brian@wildlifepartners.com. But that website will be up and active in about a week. And that website is the result of, because we've been doing all these events where we've got all these people showing up for tax advice, I've had people asking to hire me to do this consulting. And so I provide, an initial consultation is 15 minutes. There's no fee for that. If we're going to get in depth and go through an extensive evaluation of their circumstance, it's $1,250. And if you want me to go to bat for you with your CPA or lawyer, it's $5,000. And all of that is 100% refundable if your counsel and representation does not agree to do these things. I don't mean that they tell me I'm right. If they don't agree to do it, they don't agree to apply it to your circumstance, then there is no charge. So within a week or so, you can go to CCC LLC. But other than that, just contact me at brian@wildlifepartners.com.
That's awesome. Yeah, that's a really good service. And one of the other questions I had on like the expensing costs of things is, I know you said one of the biggest mistakes people make is using their main business to pay for their ranch. What are other misconceptions that people are doing in this industry with expenses or some of the bigger problems that people might not realize are problems?
I think that the biggest is just being sloppy. You're running a business, and if you're doing this in a meaningful way, the benefits are massive. When you're talking about cost segregation or with the value of animals being what they are today, you can generate huge tax deductions by doing this, like really, really significant. And in some cases, you can even go backwards a couple of years and you can recover tax from prior years. So if you have this huge write-off in the first year when you buy a ranch and you can't use all of it, You can actually go backwards 2 years and recover taxes you paid in previous years. So the biggest mistake I see people make is they're just sloppy. They don't treat this like it's a meaningful, serious business. They treat it like it's a hobby. They don't really do bookkeeping throughout the course of the year. They throw everything at their bookkeeper or their CPA at the end of the year and ask them to figure it all out. They don't put the time or the energy into building a business plan. They just don't treat it like it's meaningful, and it's because they don't understand that it's meaningful.
Right.
And in some cases, they actually believe that their CPA is giving them the benefit. They believe that. But when I get into their 1040, they're not getting it. Their CPA is actually not writing any of this stuff off. They think that they're getting it. They're not getting it. And so I think just being sloppy, like you said, buying an animal through a checking account that isn't the ranch account, or buying it through their primary business, and I'll just touch on that briefly. If you own a construction company and your ranching entity is a totally separate deal, but you buy an animal through your construction company, let's say you buy a Gemsbok, right? And then someone goes out on your ranch to catch Gemsbok later, and they get hooked by a Gemsbok and die. Well, your construction company bought a Gemsbok, and that now brings your construction company into the liability associated with that accident. And so while you think you may be sheltered because you maybe don't have a lot of assets in the other ranching industry, your whole company is now exposed, and a lawyer's going to find this. They will find it. It's part of discovery, and they will figure it out. And so breaking that corporate veil, don't give them the tool to do it. Just operate this like it's a business, treat it correctly, and you won't have these problems. And I really think that's the biggest thing I see most people do is they're so excited and they're having so much fun with what they're doing, and they're so busy in their primary business, and they've been able to delegate a lot of responsibility in their primary business so they don't have to dot the I and cross the T on these details. On this, they throw it at their CPA, and their CPA is the last person they should be throwing it at unless they make sure that the CPA is giving them all these benefits. And as I said, that's just generally not the case in most cases because most CPAs view this as a hobby. The other thing, and I can just touch on it briefly, is a breeding business is not the same as a hunting business. They're vastly different from a tax treatment standpoint. You can still get cost segregation and you still get to deduct business equipment and all those sort of things, but animals they're not business equipment when you buy them for a hunting business. They are treated as inventory. It's, like if you're in the furniture business and you're buying furniture to put on display, you don't get to write any of that off. It's all inventory. You don't get to expense it until you sell it. And that's the way it is with animals that you're buying for hunting purposes. And so if you tell your CPA that the reason you have your ranch is to entertain clients, the CPA is going to tell you that you get the treatment of an entertainment, which is very little tax deduction. Okay, you don't get the full benefit. If you tell them that you're doing this to take clients hunting, they're going to treat it as inventory, which is non-deductible. So the language that you use with your CPA matters. And that often just happens out of ignorance because they don't know the tax law. But just those are the primary areas that I see people making mistakes is they tell their CPA, this is for entertaining our clients. We're taking them hunting, which puts the big fat whammy on all of these benefits. And they treat a business like a hobby. And so the result is the CPA treats it like a hobby, which means no deductions.
So what would you tell a hunting ranch that has a breeding program or a breeding program that has a hunting, or should they have them completely separate entities on the same property?
Providing really broad guidance is difficult. Every circumstance is very unique. The short version of the story is that I would want to be in the breeding business. How you sell the animals that you're breeding is irrelevant. If you sell them live, it's the exact same as selling them as a hunt. It's the same. You're selling an animal. If you sell a hunt, you're taxed differently than if you're selling an animal. If you're selling a hunt, that's active income. If you're selling an animal, it's capital gains. So I wouldn't want to have a trophy fee because that's active income. I would just simply sell the animal. Before someone pulls the trigger, they just bought a Gemsbok. It's their Gemsbok. They just bought the animal. And that's how I would want to structure the client agreement that I have. But I would want to be in the breeding business. And doesn't mean that I can't hunt an animal, but I'm not actually hunting the animal. What I'm doing is I'm selling the animal to a buyer, and they can do whatever they want to do with it. And if they decide that they want to shoot it 27 seconds later, that is their right. They can shoot their animal 27 seconds later. But the client agreement that I would have with them would state that what I'm charging them for is they're buying an animal because it's long-term capital gains if I've had it for more than a year, which is a huge difference from a tax perspective. It's 22.5% difference.
Yeah.
So these are just little small details that no CPA is going to tell you to do, but they're meaningful, particularly if you're doing a lot of revenue.
Right.
So it just, every situation is a little different, but I think creating a business plan is the way you solve that. And by really going through a thorough evaluation of your current structure and then getting your CPA to approve that structure, that's because at the end of the day, the CPA is the one that has to file all this stuff. I'm not doing the filing, right? So can I introduce you to a CPA that I already know is going to go along with all these things? I can. I know CPAs that are very well versed in this. So if your CPA doesn't want to help you with this and they just push you off, we have people that can help. But at the end of the day, the CPA is who's doing the filing. And so you need the CPA to put their stamp of approval on what they're doing. And that is where we come into play, is just making sure that the CPA is aligned on all of the structure and getting your lawyer to agree that the structure is in fact the right way to do it from a liability perspective.
Do y'all do anything with like people's financial advisors? I know that might be a completely different sector, but they advise people on their finances. So is there any cross between y'all? It's
half my business.
Yeah.
So we do about 50 million in sales, 25 million or so is through financial advisors. So the investment product that we sell, people refer to us as partners, or they use the term LLC or whatever. So where that terminology comes from is that we sell an investment partnership into the financial services space. It's roughly an $11 million deal, and we have another one that's $45 million. But these deals, I don't sell them. I'm not going out and marketing to an investor. What we're doing is we work with financial services firms that work with ultra wealthy people all over America. And these clients are being sent to these investment firms by CPAs and lawyers. And so what they're doing is they are taking our product in the wildlife space and they're presenting it to their clients, and then their clients are investing in our product. So 50% of my business is working with financial planners. It's working with people that are in the space of financial services, that hold licenses. They're RIAs and broker dealers is who we work with. And we work with several tax firms as well.
Yeah, and I think last time you were on is right when you were about to roll out those two investment opportunities that were like the 11 million, 45 million.
Yep.
The two questions I would have on that is, one, can you explain like how someone buys into that and what they get? And two, how's it going?
Yeah, so we actually have, there's a portal that we use where people can actually go log in, and they can look at all of these investment vehicles, and they can actually make an investment right there through our website, wildlifepartners.com. If you click on the investment tab, it'll take you to the link that takes you directly where you can look at the offering. There's two offerings that we have on there, and this really highlights the significant importance of understanding tax legislation and the risk that business owners face every day around regulation. And I have these two offerings, right? One of them is just animals, and the other one is animals and real estate. The $11 million deal is animals. The $45 million deal is animals and real estate. So why do I have two offerings? As you know, I like to study tax and I like to watch regulation. And I was watching what was happening in our industry. when depreciation started to come down and we went from 100 to 80, 80 to 60, 60 to 40, and I knew 40 to 20 was coming, I said to myself, if people are not able to deduct the cost of these animals 100% in the first year like they have been, the business is going to slow down. And what did we see beginning in 22 and 23? We saw prices come down. That happened. Not all species, but most species. They came down significantly between 22 and 23, 23 and 24. And then they've stabilized in 24, and we've actually started to see an uptick. So why did that happen? Well, there's a lot of reasons why it happened, but one of the reasons is because the deductibility of all of these things changed. And for the people that understand it, it affected their buying patterns. It affected us on the investment side as well. So I said, I need to create a product that's going to allow me to stay in business if we go back to 20%. So I created a product, which is the $45 million offering, that gives us the ability to get about an 80% tax deduction in the first year. It had the big, beautiful bill not have passed, it would have only been about 50%. But it also would give a huge deduction in the third year, assuming that some things happened. But this was basically a regulatory safety net for wildlife partners. This deal was designed to protect us if the number one, Trump didn't get elected, and number two, if a tax bill didn't get passed. And so we invested millions of dollars into this $45 million offering, both doing the legal work, doing the research, buying the piece of real estate, going through the whole process of putting this together. In the process of all that, we were thinking our $11 million deal, it might not get funded. You know, if we don't give people a huge deduction in the first year, they're going to be less compelled to make these investments. So what we saw in the first half of 24 was things were a little slow. They were slow. We were very optimistic about our $45 million offering. But then on what does Trump call, what did he call it on July 4th or the 5th when he signed the big, beautiful bill? Not Liberation Day, but he had another name for it. I don't remember what he called it. But when the big, beautiful bill passed, everything changed. Our business exploded from that time forward because of the deductibility of things. So our $11 million deal funded completely. And then several other deals that we have going, they funded as well. The $45 million deal hit the brakes. And it hit the brakes because people invest with us for tax deductions. That's why they're doing it. And when they're looking at a deal that on one hand, it gives them 91.5% tax deduction in the first year, and the other deal is a 50% deduction in the first year, which one do they pick? Well, they pick the one that's 91.5. Right. So I had two competing products in the market. So we've amended the $45 million deal to where now it offers an 80% deduction in the first year. So we're really putting a full court press on that deal in 26. But because of the passage of the bill, my safety net wasn't needed. But it doesn't mean I didn't go put millions of dollars of investment into building it, but I had to.
Right.
Like I had no choice. And if you're in business for yourself and you don't pay attention to government regulation, at some point it's going to kick you in the teeth. And so we were forecasting what was going to happen. We had our fingers crossed, hoping that some kind of a tax bill would get passed, but no one knew whether it would or not. And so I'm grateful for the fact that it did, because ultimately our revenues last year were flat from the year before. But it's been a little painful, honestly, Austin. We've got, I don't know, we probably have somewhere around $5.5 or $6 million of cash out the door on the $45 million offering for a deal that stalled because the big, beautiful bill passed. So it's hard to be mad that it passed because we picked up the business on the other side, but it doesn't mean we don't have to come up with a solution on how to solve this on the fact that the bill did pass.
And let me ask this. So the second part, because people aren't just giving money because they can. So what do your investors get? I know it's going to vary each investment group or each investment opportunity, but what does it look like? Because I feel like a lot of people will quote, like people are just giving money, it's for tax, but what is the backside of that of longevity of payment to your investments?
Yeah. So if they're just giving money for tax purposes, I'm going to go ahead and give my Venmo out and they can just Venmo it straight to me. That would be fine. I don't mind that at all. Obviously, that's not how it works. So the way our partnerships are structured is that on the $11 million deal, they're buying animals. They're buying animals, but they don't own a piece of real estate. So no different than anybody in the state of Texas that buys animals from us. They're buying those animals from us at the exact same market rate that anybody in the state of Texas is buying them. But we engage a master service agreement with the partnership. So that $11 million deal, it lasts for roughly 6 years. And we have a master service agreement where the way that it works is that we get the same kind of retail wholesale split that we do with anybody else we do business with. So when I sell an animal to someone in Texas, I'm selling it at retail and I paid wholesale to buy it. Our margin across the board is about 30%. That's our gross margin. Okay. But that landowner that buys it, he has to have the land, he has to have the staff, he has to do the feeding, he has to provide all the services and everything else that goes along with that. On our $11 million deal, we have built in the first year of operating expenses as part of the capital raise. So the first year of operating is part of that. It's part of the money that we raise up front. So it covers all the overhead associated with getting the infrastructure built for fencing. It covers the water troughs we put in. It covers the feeders we put in, the vet bills. It covers the staff that's out there watching them, all those things, right? So starting in the second year, the way that we get compensated is that when we are selling animals, we get a management fee each year that comes out of the sale of the offspring, and we get the same retail wholesale split that we get with anybody else. So we're making 30% on every transaction where an offspring is getting sold. But the money that represents the wholesale value of those offspring is distributed to all of those investors. So what they get is they get ownership of animals. They get an allocated piece of real estate that basically turns them into a renter. So we talked about commercial real estate. The way that you cash flow commercial real estate is by having a tenant. Well, my tenant is an $11 million partnership that owns animals. So I'm a VRBO for animals. We provide real estate that other people house animals on, and then they're basically just paying us a fee to keep them there, and we make money on the retail wholesale split. So what they're getting is a 91.5% deduction in the first year, and then they're getting cash flow that's taxed at long-term capital gains, on the offspring sales. So it's very simple.
Yeah.
I would love to tell you it's highly complicated, but it's not. It shocks me that no one else has stepped into the marketplace with a similar product. We're still the only game in town 10 years later. And it's nice being the only game in town. But I can tell you, it would not hurt us if another company showed up at these broker-dealer conferences selling a product that's the same or similar, because it just further legitimizes the business. It legitimizes the industry when there's more than one person there. So I've always said it's an open door. It's just an expensive one to walk through.
Right.
The cost of entry is expensive.
Yeah. So now one of the other ones mentioning the big, beautiful bill, but from a selfish standpoint is from a tax and business perspective, how does the big, beautiful bill indirectly or directly encourage people to market their property and their animals?
I don't think you'll meet anybody that will tell you that Brian Gilroy is not a salesman. So marketing and sales, I guess they're kind of the same thing. One of them is direct, and I think one of them is more indirect. The entire premise of everything related to the big, beautiful bill and how it applies to a Texas landowner, it begins with one foundation. You have to have a viable for-profit business. That doesn't mean you have to make a profit. It just means that you have to have the intent of doing that. Anybody that tells you that you have to make a profit 3 of 5 years or 5 of 7 years, baloney. It's hogwash. It's not true. Those are safe harbor laws, and those safe harbor laws basically guarantee that you're for profit in the IRS's eyes, but you don't have to meet those standards. That is not required. You have to prove that you have a motive for a profit. So if you're going to do that, it kind of makes sense to do some marketing, right? If I'm going to prove to the IRS that I have a for-profit business, it makes a lot of sense to have a website.
Right.
It makes a lot of sense to do some marketing videos. It makes a lot of sense to get great photography. It makes a lot of sense to have a bookkeeper that's doing your books on a routine basis. But if you just talk about the marketing, if the IRS shows up and they question your cost segregation or the depreciation that you're taking, and let's just say that number that you took, let's say it's $5 million that you took in deductions in 1 year. That's a big number, right? Let's say you did it. And the IRS shows up and they say, Austin, we realize that you're doing really good in Droptine and making all this money selling all this marketing, but this ranch you have over here, it's just a hobby. And you say, au contraire, mon frère. That's not true. And you take them to your website and you show them your website traffic and you show them all the marketing that you did and all the videos that you created and all the social media that you posted, and you show them all these things. These are part of the recipe that's required in order to demonstrate to the IRS that you have a meaningful business. So how much does it cost? Let's just say that I'm taking $1 million a year of deductions, which is very easy to do in this industry, right? That's $375,000 of tax savings that you're going to get from doing that. Why not spend 50 grand on marketing?
Right.
You get to write the 50 grand off. So why not spend 50 grand on marketing?
Right. We've even had it where someone called from 5-6 years ago and go, hey, can you find this kudu cow? I had a bull and he was sterile, but they're not one. Can you tell me what color the tag was in that cow's ear? And that doesn't go into a direct sell of why they hired me, but we don't delete anything. So we kept it and we're able to pull it. And it was good enough quality we could read the tag number.
Yeah. I have every single text message from 2015 forward on my phone. I don't delete any emails. I don't delete photographs. I have all of it. So if you send me a text, just know I still have it. Okay. So the point of all of this is that you're running a business like a business because you're capturing all these other benefits. So, if I'm in the marketing business like you are and I'm selling my product, I would want to incorporate this idea of you have to demonstrate to the IRS that you're for profit.
Right.
And if you think that you're going to have no marketing budget and you're not going to do anything other than spend, $49.99 to have someone build you a website, and the website has no traffic, and you're not putting an ad in the EWA magazine, and you're not putting an ad in Safari Club, and you're not doing any social media paid advertising, you're not doing any of that, these are strikes against you when it comes to the IRS auditing you and questioning whether or not you're a for-profit business. And so this is a matter of weighing value. If you're getting $1 million deduction, that's $375,000 in tax savings. What is the value of $375,000? It's $375,000. So if you have to spend 50 grand to protect that, this is a no-brainer. I mean, you would be idiotic to not do this. It substantiates that you are a for-profit business, but take it a step further. Go look around at all these ranches, and this kind of lends itself to some of the other things that we're going to talk about. Is that, Austin, what is every single ranch? Well, what is every single breeder and every single broker trying to do ultimately? What are they?
Sell animals.
That's what they're trying to do, right? All of them. They're not all great salespeople. They're not all great salespeople. In fact, most of them are not very good salespeople. So they all have the same problem. They're all trying to sell their animals into the same market. So you have the Star S auction, which has created this environment where all these breeders show up and they're marketing their animals, right? So the primary way that there's value there is if there's new people showing up. If it's just the breeders showing up, well, then the breeders are buying from the breeders, and eventually that kind of waters down. So you have to bring new people into this, right? The only way to bring new people into this is to be marketing to new people. So if the only place you're marketing is where the existing people exist, you're going to run into a problem. The problem is you can't sell your animals. And if let's say you're a breeder and you're going to these events, EWA or Star S or whoever it is, right? If you're going and marketing at these places, it's great. You're doing some marketing. But these events are just once or twice a year. Like if you have a lot of animals, what are you going to sell? 10 at each one of these events? It's 20 animals.
Yeah.
Yeah, I mean, it's 20 animals. So when are you going to sell the rest of them? Well, if you're not marketing, right? If you're not marketing, then what are you going to end up having to do? If you are a ranch owner and you breed exotic wildlife and you're not marketing and you're not building your customer base, what are you going to have to do when it comes time to sell your animals?
Call a broker.
That's what you're going to have to do. But here's the funny part about this. And this is one of the things that I see it's seriously harming our market right now. It is having a huge negative impact on the stakeholders, right? So most brokers that are in the business, and I will say I am a broker. Okay, I wear the label proudly. Most brokers that are involved in the animal business, do you think they own animals?
No,
they don't.
Majority not.
The majority do not. They don't own a ranch. They don't own animals. They have little to no infrastructure or overhead. They're just out there working their tails into the dirt trying to make a living, right?
Right.
And I've seen this new thing developing. It's not new. It's kind of new. It's been around for a while, but it's become more popular where the broker no longer buys the animal from the landowner. He didn't do that. He doesn't buy the animal at a fixed price. He tells the landowner, tell you what I'll do. I'll come out here and I'll catch the animals. Okay, you cover the cost of the vet or the helicopter or whatever, but I'll catch all the animals and I'll go sell the animals into the market at retail value and you pay me 5%. You heard anything about that? You know some people that work on that premise, right?
Oh, yeah.
So ask yourself the question, how much money is that guy spending on marketing? Is he a good salesman? Just because you know how to sling a dart, that doesn't make you a good salesman.
Right.
In fact, most of them are not good salesmen. Some of them are exceptionally good salesmen. I know a couple that are just like, wow, like that guy's really good. But most of them are not. But even the ones that are really good, if you're not marketing, you're not building clients. If you're not marketing, you're not bringing new people into the industry.
Right.
So if you look at Wildlife Partners, okay, we've done $350 million in sales since we started. I think last year we're right at 50. The year before we're at 50. The year before we're at 50. Okay, that's while prices went down. So while prices went down, our revenue stayed flat. That means we're selling more animals.
Right.
That's what that means. Okay, so we go to SCI, DSC, HSC. We go to all of these small little safari club shows that are, regional area shows. We go to 8 or 10 broker-dealer conferences every year. I do a day of education once a year. We do tax seminars. We're offering tax consulting. We have Wildlife Ranch Solutions where we're doing building shelters, building business plans, offering different types of guidance on a monthly basis where we do monthly inspections. We now do Wild About Taxes. So it's like, what are all of these? I have an online website for selling animals every day, right? So we do a podcast, like I write articles, like we do all of these things. We just spent, I think, $50,000 to do a series of articles through the Business Journal. So it's like, why do I do all these things? I do them because in order for me to maintain my company and to grow my company, it is required that we bring new people into the business.
Right.
We have to. So when you're a ranch owner and you're questioning whether or not you need to market, I can tell you that if you don't, you're going to have to hire a broker. And if you go hire a broker and you don't ask him, what kind of marketing are you doing? What have you done to build a customer base? How many customers do you have? When you say you're going to go sell it at retail, that means you should be prohibited from selling it to Brian Gilroy. Because what all these guys do, they call us.
Right.
They're on a 5% commission. And what do? They call it and sell it to us at wholesale. Like this happens all the time. So here you have a landowner that thinks they're selling at retail. They're paying a 5% commission to do it, but really what they're doing is selling it wholesale.
Right.
And I had a deal here recently. I'll just tell you, it really, I find it to be very distasteful. We had a transaction where we had some animals that we were marketing. We were pricing them below market. Okay. I say below market. I think we were pricing them at market. They were $300,000. And there's a broker that steps into the middle of this that works on a commission, doesn't own any animals, is not a stakeholder from the standpoint of this particular species, and represents that they can get those animals for significantly less money. Well, this guy was willing to pay $300,000. That was the number. But we end up having to reduce our price because I've got a middleman that's going out and driving the price down. Why would anybody that owns these animals want a middleman driving prices down? Like, why would anybody want to do that? Like, I'm marketing to go build this customer. Brand new guy coming into the industry. We're working our tails off to bring people into the industry. Like, we're working our butts off to go bring more people into the industry. Why would anybody that is a stakeholder, that owns these animals, that is breeding the animals, that's carrying the risk of the animals, that's paying the overhead, paying the insurance, why would anybody that's doing that want to be in a position where they have a middleman broker driving the value of their animals down? And that's what's been going on over the last couple of years. I've been watching it. You know, you have these people that they've run out of customers. Facebook is saturated. You know, you've got all these groups where people go out and post animals for sale. They're all posting in the same place. The viewers are all the same. You notice we don't really post animals for sale on Facebook because we don't need to. But It's like, if you're not marketing, if you're not going out doing everything you can to bring new people into the industry, and look, I applaud the EWA. They have done a really, really great job over the last couple of years since Ken showed up of bringing in lots of new people, seeing all the people that are coming to these events. They're doing a great job of getting more and more and more people interested in this. But if you're breeding these animals and you're carrying all the risk and you're not doing the work to market your product, you are feeding the beast that is ultimately going to drive the value of your animals down.
Right.
And that doesn't mean that you have to do it. You may be happier selling to a broker. But if you're going to do that, sell to the broker that does the marketing.
Right.
Sell to the broker that's building clients. Because if you're not, why would you want a broker that's going out and devaluing your animal? It just doesn't make any sense to me why people would do this, other than they're just not paying attention. They trust the person is telling them the truth, but they don't ask the questions. Like, would you ever do you ever get people that hire you and ask you about, you know, they just hire you and they don't want to know what the results are going to be?
Oh, yeah.
I mean, it's like, why would you do that? Why would you hire a marketing company and not ask, well, tell me what the results I can expect are?
Right.
Like, I want to know I want an expectation. And so if you're going to go hire a broker to catch your animals, fine. But if you're going to hire a broker to catch your animals and sell your animals, probably want to make sure that they have the customer base to do it, because otherwise they're just going to give them away. Yeah,
because even people, they'll hire us. I've had people just tell me point blank, I'm hiring you because of your Rolodex. You go to other ranches we go to, and I tell them that's fine and that's dandy, but ultimately, why aren't you marketing to get your own Rolodex? Like, I can't just solve all your problems because I've been doing this for 10 years. Which it is a solution, but it's a Band-Aid on a bullet wound. They need to be creating their own email lists, their own marketing campaigns, because I'm not going anywhere, but what happens if I do?
If you look at the top of our industry, okay, if you look at the top, all the people that are at the top, they all market. All of them.
100%.
Every one of them. They all market. And they really work to market their product. I mean, look at the guys at Palahala. They have worked their tails off to market what they're doing. They have built a customer base. They have sold a lot of animals. They have raised value in what they're doing. I mean, it's just, look at Lance. You know, Lance markets the heck out of what he does. He's very aggressive about making sure that people know what he's doing. and that he's got good stuff, and they work to market. And so going out and marketing yourself, if you want to be at the top and you want to make maximum return on your investment, it is not it's not an option. You have to do it. I mean, just look at the hunting ranches that are out there. You know, if you're a hunting ranch and you're not marketing, you're just getting scraps.
Right. Yeah, because we even now, like, you can go shoot a good Gims buck anywhere. You can go get most of these animals. They're all selling the same products, more or less the same price, but ultimately what we've noticed is half of it, we're selling the lifestyle. What lodge do you have? Can I bring my kids? Can I bring my wife? Do you have a pool? And then the way you have to do that is how we talked about it. It's kind of like an indirect sales. Like, people are going to be watching your hunting ranch and trying to tell people, like, hey, you're like, most of these things for people that are going to have a minimum of 10 grand for a pleasure item to go hunt and do this, they're not dropping it on a whim. And if they are, they already have their ranches they're going with, unless it's a very specific animal. So most of the time it's an indirect sale of, hey, I've been watching you guys for 5 or 6 years. I see your pool. I see your safari, whatever, blah, blah, blah. But they get down to the point where they're going, what do I get besides the animal? Because the animal could be in a double wide or in a 14,000 square foot lodge.
Are you familiar with the 80-20 rule?
Mm-hmm.
It's true everywhere you go. It's true in our industry. You know, it's 80% of the revenue is coming from 20% of the people, and the 20% are marketing.
Right.
You know, the problem is that the 80% that don't market, they are affecting everybody else, because when you look at pricing, there is a perspective of how our price is established. So if you go back 5 years ago and you look into the marketplace and you look at public auctions and you see a Cape Buffalo sell for $700,000, well, everybody says that's market price. You see a Gims box sell for, $16,000, that's market price. Well, then when the price comes down and you look at what's happening in an auction, oh, well, that's market price. Well, what I can tell you is that isn't market price. We're still selling animals outside of our auctions for significantly more than what the auctions are. So what are the auctions for us? Yes, they're a liquidation event. They're marketing. The auction is marketing. That's what it is. So if I sell something at a lower price at an auction, I'm okay with that, because I'm getting all this other value from doing that. So it's like, what is market price? Market price oftentimes is not disclosed. People don't disclose it. So what you're selling an animal for may not be what some other guy sells it for. But in the hunting industry, it's much more disclosed on websites. But, we sold Gims buck, I don't know, a couple of weeks ago at $8,500. And so it's like, we sold a bull for 10 grand. And so it's a big bull, but it's still 10 grand for a bull.
Right.
And so if you go look at Wildlife Buyer or even my webpage, you're going to see sometimes that there's value to be found on those pages. You can buy stuff for less money. But for me, what's the value of that page? It's the 3,500 users that I have access to go market outside of that auction.
Right.
So am I willing to sell stuff for less money in that venue? Sure, I am, because I'm capturing this other value. But I still don't want to sell it for nothing.
Right.
I'm not going to let it just go out the door for some ridiculously low price, because it's our animal. I'm not making a 5% commission on it. We don't even take consignments as a general rule. So it's like, I want to drive the market forward through education, through transparency, and a whole lot of marketing. But I really think that by getting people to really understand the tax component of this, it makes it very easy to encourage them to spend money on marketing.
So with that, is marketing a complete write-off? Is it being able to do 100%, or what is that?
Yeah, it's an expense. You just deduct the full cost of it. I
thought so. I've just never asked a professional.
Yeah, it's 100% deductible. It's 100% deductible. So it doesn't make any sense to not do it. I brought some statistics just from within our company.
Yeah.
From the last 2 years. I get asked the question a lot about what's funny how they get asked. some people say, what's the most exotic animal that you sell? I'm like, well, they're all exotic.
Right.
Let's define exotic. But they often ask, like, what is the animal that's the most sought after? What's the one that people want the most, or what's the one that people are after the most? And what I brought is, these are just revenue numbers. They're not quantity numbers. They're strictly revenue, but they're insightful as it relates to the breeder market and the size of it and how big it really is. So this year, some of this is going to have a wholesale number blended into it. It's not a huge number, but we sold $5.2 million worth of kudu. And if I net that up a little bit, it's going to be closer to $6 million. So last year, that number was about $6 million as well. Okay. So think about that. I'm just one guy, right? Lots of ranches out there have kudu. Lots of ranches are selling kudu. You see Star S sales sell lots of kudu. There's kudu being sold all over the place. So if we sell $6 million of kudu a year, what is the total market of kudu annually in Texas?
Right.
And I don't know the answer to that. I can take a wild guess, but I don't know the answer to it. Do I think that it's, do I think it's $30 million? Probably. Do I think it's 50? No. But do I think that the total kudu market is $25 to $30 million? I do. Right. So if I'm a guy that breeds kudu and I look at the market and I say, there's $25 million of capturable market space in the kudu market. Doesn't mean I can get all of it, right? But what percentage of the market share can I get, knowing that there's $25 million or $30 million of annual kudu sales at current prices? Imagine what it would be if we went back 4 years.
Right.
And so if you look at sable, we sold $4.5 million of sable this year, whereas we sold $6 million last year. Bongo, we're at about $3.5 million this year, $2.5 million the year before. Nyala, we're at about $3.2 million this year versus about 2.1 last year. There's a species that we saw go way down in price, right? Way down in price. And the sense was, Gemsbok, if the bottom is really falling out of them. Well, we sold $2 million of Gemsbok this year. Last year is about $1.7 million. And so I really think that, when you're a breeder and you're in this market and you're trying to understand the opportunity that's available to us, assuming that the opportunity is stagnant and it's not growing. In other words, the value is not going up. The number of buyers is not going up. It's staying stagnant. There's millions of dollars of opportunity from a revenue standpoint within these species. We've got 1, 2, 3, 4, 5. There's 11 species that we sold this year that were over $1 million in revenue by species. Last year, that number was 7. That's over $1 million. And then you have all the rest of them. And so if you're looking at this and you're questioning whether or not the market is big enough, or is there a saturation point, or is it worth doing, or can I build a meaningful business? There's lots of data available. When you start building a strategic plan that includes running this like a business, where you are really capturing the tax benefits, you're improving your ranch real estate with pre-tax money, you're investing in exotic wildlife that potentially go up in value, but more importantly, they have a baby every year. You're taxed at long-term capital gains, and you say, well, damn, if they sold, call it $2 million of Gemsbok, how big is the Gemsbok market? Because we didn't capture most of it.
Right.
I can tell you we didn't. We sold a lot, but we didn't capture most of it. You can start forecasting from a revenue standpoint what you can expect for your ranch. And we're an open book. If people want to know, all they have to do is ask. I'll give them the data. I don't mind sharing the information. It's just, this is an industry that is ripe for massive growth, not because animals are cool, not because Texas is cool, not because we have a cool environment, but because the big, beautiful bill lets us write off all of this. We get to improve our real estate with pre-tax money. We get to do it on property that has no property tax, and we get taxed at long-term capital gains rates on the way out. It's like, this is the biggest no-brainer that I can show anybody. The only contingency is you have to have another business that you can use these tax incentives to offset that tax liability. Right. But as I said, I'm a very black and white statistics-based person. And if we collectively as an industry start advocating to grow our industry through best practices, doing the right thing, not burning people down, stabilizing our market by making sure that when we're liquidating, we're doing it in a venue that's not driving prices through the floor. There's just a lot of things we can do to really, really make our industry explode more so than it has over the last 10 years. But if it's going to happen, it can't be a hobby. It has to be treated like a meaningful business. And we have to be willing to kind of separate out, here are the people that are really setting the mark and building, the value in our industry, and then there's everybody else. Right. And if we let everybody else dictate what the price of our animals are, what the value of the animals is, it's going to be really a bad deal for the people that are really making a meaningful investment into this.
Yeah, that's one thing that I'll say about, because I feel like I'm in the middle grounds. Like, I've got a lot of friends and dear friends of mine that are brokers or day labor or however you want to put it. Then I have a lot of ranch owners. And so I'm kind of in this weird spot in the middle, but I feel like the brokers like to just say badmouth the breeders. Oh, it's just an Axis. Oh, it's just a Gemsbuck. It's X, Y, and Z, until an Axis sells for $75,000. Well, then what does that do for them? That's whether it's percentage or on a flat rate. They're like, hey, breeders want to buy from me. So it's a war against each other that shouldn't be there, because ultimately everybody benefits off of the breeder, because they're the one putting in the money, going up and putting up the cost to market animals to make them worth more. And that, if you are a broker, and sorry to my broker friends that hear this, but you are the ones benefiting from their marketing. Like you said, it's the 80-20. And so if those people were pushing and promoting themselves more, then it's the same thing with the animal. If you promote an animal, you can make more money off of it. If you can track DNA, you can make more money off it. The more statistics you have off of it, it just happens to benefit the rest of the 80% who aren't doing that.
If you look at real estate as an example, whether it's a ranch or whether it's a house, and you're going to sell it, you have no customers to sell it to. You have to go out and hire a broker. But when you hire a broker, you want to know what their marketing budget is. You want to know, how much money are you going to spend to market my house? And if they come to you and they try to get you to sell your house for less than what you know the house is worth, you're going to say, no, I'm not going to do that. But people don't do that in the animal business. They don't do that. And it's because they're not taking this seriously. They treat it like a hobby and they're looking for convenience, but they would never do that ever. They would never do that with their gun collection. They would never do it with their coin collection. They would never do it with their real estate. They would never do it with these other areas, but they do it in the animal business. And it's just simply because they don't view this as, this is actually a store of value. This is an enormous amount of money that you're dealing with. It's no different than hiring a manager. When you hire a money manager and you put $10 million into an account, are you going to hire a guy that has no experience and no knowledge and no expertise and then just leave him unchecked? Like, the guy has to have a license and he has to do continuing ed and he has to have a background check and all these things, right? But yet you go buy $5 million worth of animals and you put a guy out there on the ranch to run it, and you don't show up for 3 months. And this guy, he just happens to be willing to live there. He doesn't know anything about how to take care of those animals. And so it's the mentality associated with how we approach this. It has changed a lot. I will say that 10 years ago, it was vastly different than it is today. And I feel like I made a lot of, let's just say, people that didn't want to be my friend, because I put light on the way these transactions were working between landowners and brokers, and they were very much advantageous for the broker, and it was a huge disadvantage for the landowner. That's changed a lot. It's not that way anymore. But what I've seen over the last year, really, I would say the last year to a year and a half is that there's starting to be things showing up in our industry that are just plain ass wacky. And people are believing things that are just, they're lunacy. They're not doing their homework. They're not paying attention. They're accepting things that are just, in my opinion, they're asinine. They know it doesn't make sense, but they see everybody around them doing it. And they're like, oh, well, I'm going to do that too. And it is ultimately going to leave a bad taste in a lot of people's mouths. But I feel like, in this dynamic of broker and landowner, our industry needs brokers. It does. It needs brokers. We need people that are going to assist landowners that don't know how to catch animals, that don't know how to do the marketing or don't want to do the marketing. I just really would hope that landowners would negotiate deals that set a floor on a price for that broker to sell at, or require the broker to buy the animal and make them pay for the animal. Right. And then they can go sell it for whatever they want to sell it for. But establish a price that you require for your animal and sell it at that price, versus this open-ended, you can sell it for whatever you're going to sell it for and I'll pay you 5%. Right. That's the one thing I'd like to see cleaned up on that. Because I think a lot of the brokers that are out there do a great job, and I think that they really provide a great service. And the ones that couldn't survive aren't around anymore. Right. They're gone. And so I'm the same guy all day long. Unfortunately, I speak my mind. Whether I'm dealing with a broker or ranch owner or whatever, my opinions are, they're my opinions. They may be based in fact and they may not. But I think brokers are necessary. I think we need them. But when we allow people that are not stakeholders, they don't own the animals, they don't own the ranch, to drive prices of the animals that we own down, it's not good. It's a bad deal. It's a bad deal for every stakeholder out there. And the solution is really simple. This model of, I'm going to sell your animal for 5% and I'm going to get retail, but I'm not going to pay any attention to whether or not you do any marketing. I'm not going to ask you about your customer base. I'm not going to ask you where your website is or what conventions you went to or how much revenue you did last year. I'm not going to ask any of those. I'm just going to trust you. That's just foolishness. And so at the end of the day, it's really the fault of the landowner that's buying into these stories versus the broker that's taking advantage of the opportunity that's in front of them, because at the end of the day, they don't want to take the risk. They don't want to have to buy the animals because, look, an average catch job, you're spending $80,000 or $100,000. And do they really want to float $80,000 or $100,000? And the answer is no, they don't. They don't want to take the death loss. And so I'm not saying there's anything wrong with that structure. I'm just saying that it's a detrimental structure to the industry. It hurts the industry for a landowner to agree to that kind of a deal if the broker's not doing any marketing and has no meaningful customer base. Right. So that's I'd like to see that change.
Yeah, I think it's good to, in any business practice, make an educated decision rather than a decision. And so one of my things that is making decisions at stuff that's not quite there yet, but has to be, how would you put it? Has to be done somewhere. What about like embryo transplants or in vitro or anything like that? Like, this industry is growing and people are trying new things. So what has Wildlife Partners been doing in that realm of the world?
Yeah. So, this is a subject that it's very interesting to me. It's not new to me. I got into the wildlife business in 2011. And before Wildlife Partners, I had a ranch and some animals and things like that. I bought some tur, bought a really big markhor. Trying to think of the other species I did this with. It was markhor, tur, and something else. Trans-Caspian and bighorn. I actually shot a desert bighorn here in Texas, and I was able to get post-mortem semen out of it. And then I tried to use the postmortem semen in Trans-Caspian urials. So I started doing this a long time ago. Originally, I was working with Davin. Really liked Davin a lot. Davin's a great guy. We did AI on Markhor. I think Markhor, and then we did the sheep, and I want to say there was one other species, and we were unsuccessful. It didn't work. We didn't get any viable embryos at all. And at the time, the primary place this was being done was in white-tailed deer.
Right.
And in white-tailed deer and red deer, this has been done for a long time. The science is pretty well defined. I think in fallow deer, it's been done for a long time. Maybe not here, but it's been done for a long time. The science of it has existed for a long time. In the cattle industry, it's existed for a long time. I actually do this in the cattle industry, and the results are nowhere near what people expect them to be. They're way lower than what you would anticipate, but they're still economic because the value of the animals that we're dealing with. But this is not a new thing to me. It's something I became interested in quite some time ago. I invested money in trying to do it, and ultimately, I got the T-shirt is right. What I got, right? So then, over the last several years, there have been some people pop into the industry promoting this concept, and it's getting promoted into the industry that we can do this in every species, and we can do it with all of them. And the fact is that when you leave out domestic livestock, and you leave out deer, a cervid, the number of times that this has been successful is just like astronomically low.
Right.
The guy that did the big sheep that he was going to go to prison for, the Marco Polo, right? He did this with a Marco Polo. He cloned a Marco Polo, and he was successful getting it into domestic sheep, and he produced all these sheep, but he's doing it with domestic sheep. With a domestic animal, this is a very different process than it is with a wild animal. You have that guy, and then you have the bongo that was done in the 80s, I think, at San Diego Zoo. And you have the one that happened just recently. But
right.
apart from that, I don't know that there's ever been any success at all, ever. But now suddenly, in the last 2 years, we can do this with Golden Gemsbok, and we can do it with Impala, and we can do it with Markhor, and we can do it with kudu and sable. And not only can we do embryo transfer, but hey, we can clone them. We can do all these things, right? And it's every species under the sun. And so the gentleman that did the bongo here recently, very focused, very committed, tremendous investment. I don't know how many eland he bought. I don't know how many bongo he bought, but I know he invested an enormous amount of money into doing this. And they were, in essence, duplicating what was already done in the 1980s. And the question of, is this a vocation? Is it, research? Is it economic? Well, what is it? And I would tell you that knowing him, he approached it from the standpoint that this is cool. Maybe eventually it'll be economic, but it's worth proving it to see if we can invite institutional money to step into this as a method of saving species. You
Right.
have Colossal's raised, I think, like $500 million or more trying to perfect these sciences, right? So, and think about that. You have a company that's funded by the wealthiest billionaires in the world. They're raising hundreds of millions of dollars, and they gene edited a dire wolf, and it made global news, right? But yet somehow this company that's raising hundreds of millions of dollars, who is spending that money very rapidly to develop these sciences that has this success of gene editing. But yet, somehow a small company in Texas is going to figure this out with little to no funding. I think that my friend's goal here was to, number one, do it.
Right.
Prove that they could do it. Find out whether it's economic, but create a pathway that says, this is research, and it's a lot of research, and let's invite institutional money into this. Right. Institutional money can go spend money and not have to be economic.
Right.
You and I and all of these landowners playing this game, doing this, they're not signing up to go spend millions of dollars on research just for kicks and grins.
Right.
Everyone that I've talked to, with the exception of this guy, is looking at this as a short-term, capitalistic, commercial operation. And I can tell you what we did. I have drawn semen on sable, kudu, bongo multiple times.
Have they been valuable?
No. No.
Were they sterile?
A lot of urine in the semen. We did store some. We even sexed some semen. But the process of all this is something I don't think people really think through. And if cloning and embryo transfer was such an easy thing to do, I mean, it'd be getting done everywhere.
Right.
It's not done everywhere because it's expensive and it's not easy to do. You know, this is not really a commercially viable tool in most places. In some places it can be, but it's not. It is with high-end cows, but it's still very expensive to do it. But I know going into it what the expectations are because it's been done so much. But, you know, if you're looking at these wild animals of kudu and sable and bongo and Cape buffalo and all these other things, the impala, we're talking about two separate things. One of them is cloning and one of them is embryo transfer, right? So to do the embryo transfer, we have drawn semen. I have knocked animals down in order to pull oocytes, and we have killed animals, very expensive animals, trying to pull oocytes. I don't know how many black wildebeest. We did a deal, right? We bought into a group of white-bearded wildebeest that were supposedly primed and ready, and 3 of them may have been carrying an embryo of a black wildebeest. Turns out they weren't even pregnant, but they were about to burst when I bought them. I mean, they were on the brink of having babies, right? And come to find out they were way past their due date to begin with. But the long and the short of it is that we went through this process. We went out and we caught black wildebeest to pull oocytes. Again, I don't know how many females we ended up killing. It was several. And what we found out was, it's really hard to pull oocytes if you haven't fasted them. You have to fast them. Well, that would have been nice to know up front, you know, and how do you fast a black wildebeest?
Right.
How do you do that? There's grass out there. Am I just going to stop feeding them? Like, how do I fast a black wildebeest to prepare for embryo transfer or to pull oocytes? So we had a 0% success rate there. And it cost me, let's just say the number is 4 black wildebeest females at $50,000 or $60,000 each. So just the cost alone of the death loss, not to mention the helicopter, not to mention all of the white-bearded wildebeest that died in the process of all this. But it was hundreds of thousands of dollars that I lost to get no result. 0, not one. And I was the second guy on this train. There was another guy that started it of buying all the wildebeest, putting the wildebeest out there, doing the same thing. He got no babies. So collectively, what did the two of us invest? I don't know, $750,000 to get nothing. And let's just say that one of them did have a baby. Like, let's say magically one of them had a baby. Well, why? Why did the one have the baby and the other 50 did not? Well, there's no one to answer the question. This is just a crapshoot. We're just throwing a technology at something, hoping that it works. We're losing the opportunity to breed animals in the process of it because we're taking them out of breeding programs. We're putting them into this situation so that we can pull oocytes, et cetera. And we're putting them through immense stress in order to do this. I've done it with bongo, 0% success rate. Okay. We got no oocytes. We knocked down a bottle raised bongo 2 or 3 times, all the times we did it, we got no oocytes. In fact, we weren't even able to try at one point because when the animal was hanging upside down, she started to regurgitate and we were going to lose her if we didn't do something about it. So I went out and bought, 10 donkeys to try to do embryo transfer on grevies. And we were just not ever able to coordinate it to get it done. And I think that's probably the one with the lowest bar, because getting a donkey to take a grevy embryo, I think is probably viable. I think that'll work. But I hear about all these things that people are working on in this sector, and I'm looking at the one success. And the one success is, and this is not something that I'm coming up with. This was part of an interview that was done just recently. I think they transferred 150 embryos in order to get one baby. I can't pencil out the math on that. I don't know what it cost. I have no idea. But at the end of the day, it worked. And why did it work? I don't know the answer. And maybe they know the answer. But what I do know is that today, right now, this is not commercially viable. It would be wonderful if it is commercially viable at some point in time. I don't think we're even in the realm of being close to any of this being commercially viable. When you're talking about the cloning side of things, again, what you're doing is you're creating an embryo through a clone. And now you have to get that clone to land in another mother, and you have to get that mother to have that baby. So that embryo, it's the same as flushing or creating them in a petri dish, whatever, and then putting them into a surrogate. Well, in that case, it was 150 transfers to get one baby. So if I'm doing this with sable or kudu or bongo or any of these things, and I'm approaching it from the standpoint that this is going to be easy, I can tell you have lost your mind. I easily have over $1 million into this project, and I have no results.
Right.
0. Not a single pregnancy. 0. Not one result. And will it eventually get perfected, and will it become something that's a useful tool for conservation? I think it will become a tool for conservation long before it becomes a tool for economic viability.
Right.
And, there's some projects going on right now around embryo transfer with some really rare species. And I think it's cool, and I think it's great. My worry is that there's a lack of homework that gets done on some of these things. When you're taking a species, like I'm going to use some species that don't name this one, but bushbuck, lesser kudu, hartebeest, okay, dikers. These species don't really exist in large numbers here in Texas, or for that matter in the U.S. And It's not because they were not imported. It's not because they didn't come here. It's not because zoos didn't send them to us. It's because they've experienced genetic bottlenecking. They've reached a point from a genetic standpoint where they're not thriving. And you can look at these species and you can see in the import records. When I say import records, what I mean is the AZA maintained records going back into the early 1900s of all of the animals that they were bringing in their stud books. And so you can see where they were imported from, whether it was from Kenya, or whether it's from East Africa, or whether it's from Zambia, or any of these other places where, the origin seems to matter these days.
Right.
And you can see exactly what was imported. You can actually see the imports and where they came from. So when you're looking at things like lesser kudu or bushbuck or hartebeest are gone. They're not here anymore, right? They had genetic bottlenecking. You have bushbuck There's very, very few of them. They do exist, but there's very few. Slenderhorn gazelles, same thing. There's very few of them. And it's not because they didn't get the same opportunity as an Inyala or a Cape Buffalo. There were roughly, I don't have to go back and look, but it's roughly, I think, 7 or 9 female Cape Buffalo left here in 1991. But look today, and we have over 300. They are not running into this genetic bottlenecking issue. And people think about genetics differently than the way I do. You know, you see an addax with wonky horn. That's inbreeding. No, that's God. God made them that way. Like, they're not perfectly symmetrical. Like, that's just how they are, right? So what does genetic bottlenecking actually mean in practical terms? Well, let's just say that you, genetically speaking, you have a defective heart valve, right? This is a genetic trait that gets passed down through your family. So the doctors ask you if you have a predisposition to cancer. You know, these are questions doctors ask. These are invisible. These are invisible things. You don't see them on the surface. This is not a phenotype you can just look at and say, oh, well, that's inbreeding, right? So when you take animals that are related in Africa, when we go catch them, they're related. Okay, we're catching family groups, and then we import them into the U.S. and we say they're unrelated, but really they're related. And then we start breeding them, and we breed them together, and we breed them together, and we breed them together, and we say in the AZA, oh, well, this animal has genetic diversity, but really and truly, maybe they were related from the start. Well, some of these animals, they move their way through the process and they don't have problems. Inyala is a great example. Sitatunga is an example of a species that just doesn't seem to thrive. They just don't seem to do good. So what most likely is occurring in most of these cases where you have hartebeest or bushbuck or these other species that are extraordinarily rare is that there is something genetically speaking that's causing them to not thrive as it relates. They may live for several years. I mean, it's in the cattle industry. If you have a mother that's got a bad bag, you don't breed that female.
Right.
You don't do that. But we don't even think about that. I had something happen just the other day, and I think this is actually true with mountain bongo. I think it's true. I think that the mountain bongo that we have here, in some cases, they're bad mothers. I don't think that they do a good job of taking care of their young. And I don't know if it's because they have poor colostrum production or if it's because they have bad bags. I don't know what the issue is, but the mortality rate in bongo, it's high. It's higher than other species. We had a little female that we lost a couple weeks ago. She had a navel infection. That's what she died from. She was a month old. So clearly she was getting milk, clearly she was eating, but clearly she did not get an adequate amount of colostrum to get passive transfer.
Right.
So what does that tell me? Well, it tells me either the baby was weak and didn't nurse when it needed to nurse when she was producing colostrum, or it tells me that this mother has some sort of a genetic problem where she's not producing good colostrum, or she's got a bad bag and the baby's just not getting enough. And so this is where genetic bottlenecking shows up. And when we as Texans look at a species that's extremely rare and we think, I'm going to save the world, I'm going to do it. I'm going to go out and I'm going to be the guy or the gal. I'm going to save this species personally. In many cases, you're beat before you start. It has nothing to do with you. It's not your fault. You're dealing with species that are lacking genetic diversity. They have some sort of a problem within their genes that is causing them to not thrive. And the easiest way to find this, the easiest way to find the answer to this question is look at when they were imported, find out how many were imported, and then look at the population today. And if there were 4 animals imported, and today there's 12 animals, and it was 30 years ago, you have a problem. If there were 12 animals imported, okay, and today there's only 100 of them, you probably have a problem if that import happened 40 years ago, unless they got exported back to Africa. And so it's not hard to figure this out. And in most cases, a lot of these species, it's documented. The AZA has documented this information. There's documented data available online that will tell you that these animals are in fact genetically bottlenecked. The other part of this is there's been a lot of discussion about the importation of semen or embryos or all these things. So I don't know if it's because I'm a glutton for punishment or it's because I'm just curious, but I use the Freedom of Information Act religiously. There's been a lot of talk about imports, a lot of talk about things coming into the U.S. So I, through Freedom of Information, request the permits. I want to see whether permits have been filed. I want to see whether permits exist for the importation of animals. And
Right.
I've done that. And what I can tell you is there was one gentleman that was successful in importing some forest buffalo. He did. He imported them from a German zoo. To my knowledge, that's the only import that's happened in a very long time. There were some takin that got imported to San Diego Zoo by an individual that went through the zoo. I don't remember how many years ago, maybe 10 years ago, but the number of imports that come into this country, it is extraordinarily low. And as best I can tell, the only place that the imports have ever come from is from zoos. These are captive bred animals that are known to be disease-free, that have no risk of any kind of disease issues. They're not wild animals. I have found no evidence that there have been any permits filed for the importation of embryos or semen for African animals into the United States. I've found no evidence of that. And so I know there are people that are investing money and time with the mindset that they're going to accomplish this goal. And what I would say is the first thing to do is some homework. Talk to U.S. Fish and Wildlife. Find out if permits have been issued. Find out if they're on the way here. Find out if they're actually going to happen. And then ask yourself the question. Let's just say that I miraculously, somehow, I'm the person that manages to import these embryos. And let's say I import 100 of them. Okay. Where am I going to put them? I have to have a surrogate to put them in. And if you look at the track record of embryo transfer related to wild African animals, there's 2 successes over the last 40 years. That's not very good. So your 100 embryos, like, how quickly does that translate into value? And as a guy that likes to do research and as a guy that likes to experiment and likes to take risk, I personally think that these sciences and these technologies are extremely interesting. I think that they could be extremely valuable for conservation, particularly with bongo. Like, I think it's really cool with bongo.
Right.
But right now, the prospect of these being commercial, there's no math that you can do that supports it. The math does not exist. It's not even.
Right.
It's not even in the realm of close. It is non-existent. And so, how long is it going to take for the science to develop in order for it to become commercial? I don't know the answer to the question. Maybe AI is going to help with that. But the question that I would encourage every person that's doing this to ask is, what is my staying power? How much money am I willing to throw at this, knowing that this is research,
Right.
and that it is not commercial? And at what point do I take my charitable donation and walk away? And this idea, one of the things that I see happen all the time is the providers that are doing this. The story that I keep hearing again and again is, oh, so-and-so said that there's a confidentiality agreement and I can't share any of the information and so on and so forth. I wouldn't be surprised if in some cases that's true. If your goal is conservation and saving species, that's counterproductive.
Right.
If your goal is commerce, it makes a lot more sense. It's kind of like having a patent. But in all of the situations I've looked at this, the people doing it don't own the technology. They don't own it. The provider owns the technology. So if it works and they figure it out, you don't own it. You don't own the technology of what you're doing. They own it. So you're paying for the research for somebody else. So I just would say, look, if we as an industry are going to do this, let's just approach it with our eyes open. Let's look at it and say, this is really cool. It's really awesome. There's some proven success. We're doing a great thing for wildlife if we're saving species. We probably ought to question what we're doing if we're doing it with bottlenecked species. And what is the time frame of my contribution? How far am I willing to go? And what I can say is wildlife partners reach their limit. And it's because while we are conservationists and we love the idea of breeding really cool, rare stuff, we are a capitalistic business. And we do not have the ability to throw millions of dollars at this experiment. And that's what it is. It's an experiment.
It's kind of like what we started with, is saying like at each trade show or each marketing deal, you have to set your objective. Is the objective to spend millions of dollars for research, or is it to turn a dollar into another dollar?
There's research institutions. It's what they do. A&M, like they have lots of money to do lots of research. Texas, they have a lot of money to do research. Texas Tech, like there's you look at Colossal Biosciences, right? This is a company that they have massive amounts of capital coming through the door. Massive. They've hired some of the best scientists in the world to come in order to do cloning and embryo transfer and DNA work. And it's like they're not trying to take an animal and turn it into a commercial production line. That's not what they're trying to do. Personally, I think that company is using animals to prove technologies that ultimately bleed over to people. That's really what I think that they're doing. I may be wrong, but that's just my assessment. It's trying to understand why all these people are pouring in hundreds of millions of dollars into a company that has no revenue. The only path that I can get to where they get a return on investment is through the sale of these technologies into the human market. Because what is the value of saving a dire wolf? Well, economically, there's not any. So why would you spend $500 million to do it? Or the mammoth, whatever the case may be. It's really cool stuff. But my point is that they have an objective. We may not all know what their objective is, but they've done a really great job of selling their objective to investors in order to be able to raise capital. And I think that the people that are providing these services here, I think to a degree, they're presenting this as research. But I think to the stakeholders that are doing it, I think they're walking into it with the mindset that it's commercial. And if you're going to look at it as if it's commercial,
got to be able to reproduce it.
Well, you can do the math. I mean, it's if you take 20 kudu and you pull them out of production, you're not getting babies out of those kudu because they're not in production. So you're giving up all of the revenue from the production. How many kudu are going to die in the process while you're doing the transfers? And the answer is some. It's guaranteed some.
Right.
And so if you got 20 kudu and the last success was 150 transfers, I mean, that's a lot of time that you're losing as it relates to your breeding operation. But adding on top of that, you have all of the expense going on top of it. I mean, you're paying someone to do all this work and it's not cheap. I do this in cows, right? I use Transova genetics, and I do this in cows. If we get 100 oocytes, I might get 10 embryos, and out of those 10 embryos, I might get 50% of those as grade 1 and grade 2 embryos. Okay, and out of those 5 that are left over, I'm probably going to get somewhere in the range of a 2 to a 3 take rate where I end up with an offspring. So you can do the math on what this costs. The cost of one embryo ends up being somewhere around $600 to $700 for a cow. But then I have to put it into a surrogate, which is $4,100 now. So I'm talking about $5,000 to do embryo transfer on a cow. So this doesn't work for your typical Black Angus.
Right.
It only works for specialized cattle. So in cows, they're really good at it, like really, really good at it. But even being really, really good at it, the success rate, I just described it to you what it is. It's not a high percentage success rate. And so the only way it works is if you capture really, really, really high value on the offspring. But the benefit with cows is they don't die.
Right.
And you can continue breeding them in the process. You can pull oocytes up until they're 90 days pregnant. And so it's just, this is just one of those things like in our industry where when there's a lot of money being poured into an industry and there's a lot of people excited about something and there's a lot of people doing stuff to where they're experimenting and they're trying to be the next cool thing, things show up that may or may not be economically viable.
Right.
And my experience is that this is not economically viable. It's a very long way from being economically viable. And I'm hoping that the people that are spending the money doing it succeed and that their success attracts institutional money to perfect these technologies in order to make this something that becomes commercial. Because I do like the tool. I use the tool on cows. I have not found that I have the resources to be able to do it with these exotic species that are wild animals, even the ones that are bottle raised. It's still very difficult.
Yeah, that's hopefully there's more in the future to be able to be done, but it's going to be an expensive ride.
Look, there's the wonderful thing about the people in this industry is that they're risk takers as a general rule. They're wealthy. They have the ability to be charitable. They have the ability to go out and do things and experiment, knowing that what they're doing is experimentation and do it for the greater good. I mean, let's just face it. The people that live within our industry are generally conservative, charitable people.
Right.
And so I think we have a great group of people to facilitate this process of doing these things. My only fear is that, like the rest of their business, they're not approaching it like a business. They're approaching it like a vocation and like a hobby, and they're approaching it from the mindset that this is fun and cool, and they're buying into this idea that somehow this is going to be economically successful. And I hope for somebody it is. But if you just simply do a little bit of homework and talk to people that have already done it and ask questions and don't buy into the idea that there's a confidentiality deal and I can tell you anything I want. I had no confidentiality agreement with anybody I ever did this with in any way, shape, or form. I've never seen a confidentiality agreement. There may be one that exists somewhere. I don't know. But go talk to people. Find out what the track record is. Find out what the success rate is. Find out how much money they spent to do it. Go and if you think you have if you think you have embryos in the mail, ask Fish and Wildlife if you have embryos in the mail. It's available, and maybe they are. Maybe they're in the mail. I don't have any idea. But even if they are in the mail, ask yourself the question, where are you going to put them? What are you going to do if the 100 embryos you brought in, none of them turn into a pregnancy? Then what? You going to do it again? You think Fish and Wildlife is just going to sign up and say, yeah, we'll give you another permit. Let's do it 10 more times. I don't know the answer to the question, but what I do know is it's not easy. And so my hope is that the charitable people in our industry that are doing this, that they will stick with it long enough, that they encourage institutional money to step in to really do the research. Because the way I look at it is we're throwing darts at a dartboard. We're putting embryos in animals, hoping for the best. And we don't necessarily know how to answer the question of why it worked or why it didn't work.
Right.
So I'm excited for the future of the science and what it can do for conservation. But I don't think it's ever going to have a material impact on the economics of our industry. Do I think that we're ever going to produce so many bongo that we're going to drive the price of bongo down? No. No. Do I think that's going to happen with kudu or sable? No, I don't. And I'll touch on one last thing and we can move on is, we had Cyclone, 70-inch bull, spectacular 70-inch bull. I don't know that there's ever been a bigger one, and I don't know that there's ever going to be a bigger one. Okay. But that was a 70-inch bull. I'm not cloning Cyclone. And it's not because we don't have the DNA to do it. We do. When and if the technology exists to successfully do this, I would be interested in doing it. But as best I can tell right now, if I were to go down that road, I think that at a minimum, it would cost me over $1 million.
It's a lot of cows you got to sell to make that back.
Well, I just said a minimum. That doesn't mean it's ever going to work.
Right.
At a minimum, that's what I think it would cost. And that's doing it within the same species. That's putting it into a kudu. That's not putting it into an eland, which is a lower valued animal. And so I think that as best as I can tell, my assessment is that Brian Gilroy was the owner of the largest kudu in the United States.
Right.
I'm not cloning the kudu because I don't believe that I have the ability to make that economic. Would I like to?
And it brings the value of your cows up, and if you have the semen, or if you ever sell it or publicly, like if you have the world's largest and you're the only one that has it, no one can touch that. And so, but what is a physical product would be a cow, and that cow with that DNA skyrockets.
The question came up one time about why did San Diego not keep doing what they were doing? After they created a bongo, why did they not keep doing it? And the answer that I've read that I found was it was too expensive and it was too detrimental to the existing animals. In other words, they were losing animals and it was very expensive. And so it just, they didn't keep doing it. And I don't think that's changed any today. Even though technology has gotten a lot better, I don't think it's changed any. So how many kudu cows would I have to kill in order to get a Cyclone, offspring? And I don't know the answer to that. But my assessment, the way I view it is, I think it would cost me north of $1 million with no guarantee of success. And I'd rather just wait it out. Let somebody else figure it out. Let somebody else go down the road, because it's like, as best I can tell, all the people doing this, they don't own the technology.
Right. The
service provider does. So I'm sure the service provider will be willing to let me do my clone when they figure it all out. You know what I mean?
Yeah.
So I can either be the guinea pig or I can just pay the higher rate when it comes down to figuring it out. And I think I'd rather just pay the higher rate and have a higher degree of, assurance that it's going to work. But, again, this is the things that I love about our industry is that everybody is so eager to do these things. Even when it just comes to buying animals and putting them on their ranch, they're eager to do it. They're excited. Everybody in our industry, they're passionate about this. They love what they're doing. They enjoy it. They love the animals. The conservation side of it is something that's very appealing to everybody. There's this family environment. There's all of these things that feel really, really good about what we're doing. But there's also the downside. And the downside is your animals die sometimes, and it's heartbreaking. The downside is you do a catch job, and it doesn't go as planned. The downside is you go and you start darting animals out of a pen, and it doesn't work out the way you thought. The downside is you go spend a bunch of money trying to do these new sciences and technologies, and it doesn't work out. And, we wouldn't do any of these things if we weren't eager. We wouldn't do any of these things if we weren't excited. And all that, the primary aim of what I'm communicating is, and it is whether I'm talking about just getting into the business, whether it's talking about, really growing a breeding business, becoming elite genetics, whatever the case may be, just do some homework. Like we have this massive amount of data available to us, and we have AI that it'll decipher it for us. Like it'll give us the information. So it's like, why not do the homework prior to expressing the enthusiasm? And that's just really what I'm asking people to do, whether it's tax, whether it's breeding, whether it's these new sciences, is like, just do some homework. Just go do a little bit of work to find out whether or not the thing you're stepping into that you're financially and or emotionally prepared for.
Well, and hopefully this podcast can be the beginning of someone's homework, because I know they don't listen to me talk because I don't know what I'm talking about most of the time. But having guests like you on and anyone else like I said, we got everything from doctors, vets, ranch owners. I'll take anyone on who wants to talk, and we're currently making a grand total of $0 off this. So hopefully this can be a cheap, free, easy, while you're driving, listening podcast, just to get people thinking, what should I do next?
Yeah, well, I'll go ahead and give you the plug, okay? Droptine Studios does great marketing. And, it's not any secret that as you've watched over the last couple of years on social media or at the EWA conference or even Safari Club, a large percentage of the people that are putting out social media marketing, they're using you. A lot of the people that have these booths and displays and ads and whatnot at these conventions, they're using you to create all that stuff. You are playing an enormous role in bringing all of these people that want to come to the forefront of the industry to the forefront. And so it's like, for people that are listening to this, they're not going to hire me to do their marketing. I can tell you that. So you going through the effort of doing a podcast, talking to people like me, giving us a platform to talk about various subjects, at the end of the day, it's marketing. This is a way for you to bring more people into the industry and help them build a meaningful business with what they're doing. And I don't think anybody has to look very far to see your touch on the industry. If you see a really cool video online, if it's not made by Katie Leibold and Kelsey Jackson, it was probably made by Austin. And so it's just, if you're not equipped with someone to really step up to the plate and do this for you as a ranch owner, you certainly should talk with Droptine. They do an incredible job for lots of people.
Well, Brian, I appreciate it, and I'm sure this will not be our last podcast, especially being so close, but also your touch on the industry. I think it's very valuable to people, and hopefully we can do a lot more.
Well, thanks for having me. I really enjoy doing this kind of stuff. I'm passionate about a lot of things, but my passion for our industry is really built around longevity and wanting to see the industry grow in a positive way. And hopefully when I'm dead and gone, people will say that I had a meaningful, positive impact on the overall industry. So thanks for letting me be here.
Absolutely. Thanks, Brian.
Yeah, appreciate it.